Morning, everybody. Welcome back to another episode of the Market Open. It has been so long since I've been able to say that, but thankfully we are back and it is time to start the show once again. Thank you, everybody, for being here. I am still in India. I will be back in the United States on October 21st, so I have a flight this Sunday, and then I'll be back. Have not been able to do the show over the past couple of days. We did have the Robinhood stream last night. I was with Arnie for about 3.5 hours. We streamed the Robinhood event, got to analyze it. We were supposed to be a 5-minute conversation on Palantir, ended up being a 30-minute conversation on Palantir at the end of that stream, so you guys can check that out. But we're back in motion. We got Thursday and Friday of this week left for the Market Open, and then next week we are officially back to the States, and we'll be back in action. I missed you guys a lot. My mornings have not been the same without it. Now, obviously, I've been with family, so it's a good distraction to have with family. But you guys know me. I really haven't taken a day off the whole year. I think we've taken a couple days off when I was at AIPCon, and that's been pretty much it the entire year. So it was pretty weird for me to not do the show. Like, it was just like this weird feeling at 7 p.m. my time when the market was opening, and for me to not be like streaming. But we're back. It was funny. We were on the bus for a 6-hour bus ride to Jaipur from New Delhi. And at 7 p.m. when the market opened, me and my uncle, we were just like staring at our phone, and I was like reading random tickers, and he was like, "Hey, you realize you're not live, right?" I was just like, SoFi, Robinhood, Palantir. So it's the gist and energy of it has not gone away, even though we have not been live. But we are back, and I am happy to be here. Thank you, everybody, for being here. Gene, Andy, Ibot, Trucker, Valero, Kate, what's up? Thomas, Andy. We got Sanjay here, Spanish guitar. What's up? Any cows outside? I know you guys saw the short I posted. I have some other shorts I haven't posted. I don't know. I've been posting them on Twitter. I forgot. Like, I should be posting them on YouTube too. So maybe the next couple of days I'll be posting them on YouTube, and you guys will see some of the other shorts I've been taking of different elements of India. Karthik, Maddie, Arun, Bren, Carbine Collector, Midwest. Thank you all for being here today. Eric, Aaron, you guys are still saying I'm late. Of course, that can never change. Always got to be a little late. Thank you, everybody, for being here once again. All right, so we've got a lot to talk about. I'll do some Q&A at the end of the show. Probably will be a long stream, about 2 hours, 2.5 hours. So I'll be here live. I don't have anything to do today. So I'll be here. I woke up at 3 p.m. I slept at 7 a.m. India time because the Robinhood event went pretty late. And I woke up at 3 p.m., showered, got some lunch, and now we're back. Oh, Vlad's on CNBC. Okay, cool. So, I can't pull that up live because YouTube TV doesn't work in India. So we're going to have to wait till it gets posted, but it'll be posted probably pretty soon. And we'll check out what he had to say. But yeah, we'll do Q&A at the end, and we'll kind of talk about what's just been going on in my life over the past couple of weeks. We've got a lot of stuff to talk about in the context of the macro, and I want to get deep into it. We'll talk about Robinhood. We'll do that segment on Robinhood in a little bit. Obviously, I want to talk about Palantir and some of the price action we've seen from Palantir kind of consolidating, hopefully, in this $40 range. It's just incredible that we've held $40, and I think that we might continue to hold $40. But there's a lot of macro stuff, particularly around the thematic of AI. I mean, NVIDIA is almost breaking 52-week highs right now in the pre-markets. You got Robinhood right here at 27.15. NVIDIA did touch 140. Now it's at 139.93. There's a reason NVIDIA is pumping 3%, which is not a small amount for NVIDIA after it pumped 3% yesterday in the pre-markets. Like that, those are hundreds of billions of dollars of market cap that NVIDIA is adding, and that is because of TSM earnings, which we will talk about in a second as well. TSM is up 9%, passing $1 trillion in the pre-market because it looks like AI demand is not going anywhere. So we're going to get into all that, go deeper into that, and then keep going from there. Did you see the Carlson show saying he wants to buy Palantir? Yeah, I heard Joseph Carlson. Palantir was one of the 10 stocks he's thinking of buying, even though he knows it's expensive, but I think a lot of people are catching up to the broader Palantir story. All right, let's get started, and then we'll get into Q&A at the end of the show, and we'll go from there for any questions you guys have on what it's been like in India over the past couple of weeks. Okay, I want to get started with macro data. So let's do a segment on the macro and what's going on. There's a couple of pieces of macro data we got this morning that I think are very, very important to discuss, and then we're going to talk about my overall thoughts. First of all, temperature check from the chat. I feel like I've been looking at the markets every single day, but I looked at it like yesterday, and we're at 585 on the S&P 500. Are you kidding me, dude? We are close to 590 And once you get to 590, I think the momentum's there to hopefully get us to 6,000. Most analysts barely had 5,700 as their S&P price target. I know a lot of firms are starting to raise those targets now as we get closer to the 6,000s for the S&P. But I mean, it kind of feels like this just happened out of nowhere. It really feels like we were at 572 the other day, and now you look up and you're at 585. And I think a lot of that is happening based on the earnings growth that we're seeing, which we're going to talk about in a second, because earnings growth has been pretty exceptional by the banks, baby. I mean, the banks, we'll talk about SoFi as well, but the banks have crushed. And so I think the banks are playing a big role here, along with some of the AI names that we're going to see next week. And so when you put that together with Q3 earnings plus the macro data, it is not doing too bad. So here's some of the macro data we got this morning. First of all, retail sales came in at 0.4%. month over month. The estimate was 0.3%. This is now 4 months in a row that retail sales have beat estimates. Why does that matter? Because that means people are spending. Why are people spending? Because they have jobs, which gets into the initial jobless claims coming in at 241,000 versus 259,000. Now, last week we saw CPI come in at 2.4. The market wanted 2.3. I don't think that's the worst thing in the world because CPI still came down from 2.5. So we still have deaccelerating inflation. And then you saw initial jobless claims kind of spike up by over 20,000. And the market, I remember I was on the bus on the way to the wedding and I saw the jobs number and I was like, wait, the jobs number is not pretty. CPI is decent, even though it didn't beat expectations. And the market went down 0.3% and then rebounded within a couple hours. There's so much resilience on this market, which is why I'm asking kind of a temperature check to the chat. Are you scared? Are you nervous? Do you think we're topping out? Do you think it's frothy? Do you think the data is conducive with the broader momentum that we're seeing? Do you think this is kind of like FOMO? What do you think is happening? My take right here, and again, I'm looking through a lot more of the numbers, and I think over the weekend I'll be able to read a lot more, and on Monday, Tuesday have a much better, more informed take. But the numbers are supporting the momentum, and we'll talk about valuations that are getting up there. But when you get initial jobless claims with a nice beat, almost 20,000, you see retail sales going up, you see inflation coming down. What is the soft landing? It is inflation going down, growth going up, or growth at least not slowing down. And so if growth is not slowing down and inflation is coming down, and growth is characterized by GDP, by personal savings rates that seems to be revised to be higher, that jobless claims coming in lower, and non-farm payrolls, we had that big beat at 250,000 a couple weeks ago. It just seems like the broader macro momentum is there. Then you got China stimulating. We'll talk about China as well, because China's had some issues in the past couple weeks. So we'll talk about China. And then you got the Saudis with oil. Where are oil prices right now? We did spike to 77. We are at today 70. All right, so we're up a little bit. Well, we are down from 77. I think we were at 69 yesterday, but now we're at 70, so that's okay. Oil prices in that 60 to 70 range, I think, are very bullish for the broader economy as well. I mean, you've just got a lot of macro tailwinds that makes me feel this market is not some hoopla 2021 nonsense market. And then we factor in earnings growth, which we'll talk about in a second. It does seem like the momentum is pretty strong. And that is not the worst thing in the world. Let's see what you guys are saying in the chat. Nuclear. Oh man, talk about nuclear. We'll talk. Google, Amazon, all these guys are getting to nuclear, so we'll talk about that as well. Jobless claims were down this week. That's correct. September. See, so here's the thing. September, October were supposed to be down months, right? They were supposed to be two of the worst months. By the way, Tom Lee came out with some pretty bearish sentiment today, so we'll talk about his take as well. But Tom Lee's been saying since September, expect a 10% drawdown. It just hasn't happened. I mean, I think the most we got was that September 6th nasty week of down 4%, which was the worst week of 2024. And then after that, you got CPI coming in at 2.5. You got good job numbers. You had good positive estimate revisions in regards to certain numbers that a lot of people care about, like personal savings rate. And everything just started ticking higher, along with guidance coming out, or preliminary guidance from some companies showing, you got Jensen at that big conference saying, hey, AI is a real thing, and just kind of reminding the markets. And things have gone higher. So it kind of leads me to believe, I'm trying to not be euphoric and be like, hey, maybe shit's going to hit the fan as the election comes up. We'll talk about the election as well, because it does seem like that is starting to be priced in as something that is positive for the markets in terms of at least how the market's interpreting how the Senate and the House are going to be split when we have results. And it seems like that big scary thing like the election that was supposed to derail momentum, or at least put a halt to a lot of the momentum, could still happen, but it seems less likely that is starting to happen right now. So September, October have been good. Now, maybe that's setting us up for a rug pull in November, and then we have to try to recover in December. But if earnings growth continues to be the way earnings growth is going, I don't know if we're going to see some dramatic decline that everyone has been talking about as well. So let's talk about earnings. Let's talk about earnings, and then we'll get into what's going on with other parts of the market. So first of all, if you are wondering why are the pre-markets surging right now, it's because of TSM. Take a look at these numbers. TSM is up 8%. Revenue, 23.5 billion versus 23.3. So they're up 36% year over year on TSM earnings, which is just incredible. Guidance for Q4 came in at 26 billion versus, call it 25 billion, which is $1 billion beat. Now, the reason this is such a big deal is because a lot of people have been saying, hey, the AI story is going to slow down. It is not going to continue the way that everyone thinks is going to continue. There's going to be some cyclicality to it. And we saw ASML, which I'll talk about in a second. Their bookings came in 53% lower than what the market expected for fiscal year 2025. That's when NVIDIA tanked like 4%, I think 2 days ago. However, it seems from my sort of elementary understanding of the company, ASML, that is an ASML issue that is not an AI demand issue, given ASML makes machines that are important for the broader AI landscape. I know some people are thinking, well, how does that make sense if ASML is a very important factor when it comes to the AI supply chain? I get it. I don't really have a full answer to that. But from what I've been reading, it seems like that's an ASML issue, not an AI demand issue. And these TSM earnings are also proving that there's not really a demand problem here. Gross margins came in at 57.8 versus 55. Gross margins expectations coming in at 57 versus 54.7. This is going to be a big deal for NVIDIA in Q3. Can they keep those gross margins above 70%? I think they will. And if they can, I think the street's going to be very happy. Revenue growth around 30% for fiscal year 2024 versus the mid-20s for previous expectations. Here's what the CEO said on AI demand. Why I say it's real, because we have a real experience. The demand is real, and I believe it's just the beginning of this demand, all right? So one of my key customers said the demand right now is insane. It's just the beginning. That key customer is obviously Jensen Huang with NVIDIA. He also says on 2025 CapEx spend, next year will be a healthy, and 2025 CapEx will be higher than 2024. We expect growth to be very healthy in the next 5 years. TSM is pushing up all of the semiconductor names based on their earnings that they put out this morning. So what does that mean in regards to the AI trade? Well, what I think it means is that the AI trade is not over. I think that's very bullish for Palantir. We'll talk about Palantir in a second. And I think that's very bullish for the broader semiconductor ecosystem. So TSM putting up these numbers, S&P right here at an all-time high, 585 right now in the pre-markets. TSM is at 203. It's up 9%. It's going to cross $1 trillion in market cap when it opens. So it's going to be adding close to $40 billion as the market opens up. NVIDIA at 139, up 3.9% or 3.09%. And then if you look at all the semis, you've also got some momentum right here. ARM is up 4%. Dell's up 2%. Dell's at 126. Michael Dell sold $1 billion worth of stock at 122. It tanked to 113. If you bought that dip, now it's at 130, which is not doing too bad. SMCI is up 4%. AMD's up 2.65%. AMD did have that investor event where they introduced some new chips. Market didn't really care too much. AMD was at 172. Now it's back at 160, really because the market felt that those new chips are just on par with NVIDIA's last generation of chips, and they're not on par with Blackwell. So when NVIDIA gets to the next level beyond Blackwell and AMD is just catching up to Blackwell, AMD is just going to have no real competitive growth dynamic against NVIDIA, which is why the market wasn't too excited about that event. But overall, they did announce even more faster chips coming from AMD. Qualcomm's up 3%, Broadcom's up 2.89%, ASML is up a little bit after falling 20% this week, and then Intel's up 1.34%. What does this mean? Well, it means the AI trade is going on. And if it means the AI trade is going on, it means the Qs are probably going to get some momentum. When you talk about NASDAQ, you got NASDAQ right here up 1% at 496. The top of, for NASDAQ was 502 back in July. And then you got the S&P that's filled with a bunch of these semiconductor names here at 585 that are also gaining momentum. What this also means when you see TSM demand, like we saw this morning, is you've got some people that have some regrets. And this one was a surprise yesterday. Here's what you have to say about selling NVIDIA a couple of months ago.
A while ago, we spoke about NVIDIA, and you had said that it would be something that you held for years. And ever since then, you held it for a while, but more recently, you've been selling it off. How much do you have left of it, and why have you been selling? Can you see yourself getting back into it again?
I've made so many mistakes in my investment career. One of them was I sold all my NVIDIA, probably in somewhere between 800 and 950. I think it's 1,300 on that stock now.
You own none today?
I own none, and I own none the last 400 points. It was a big mistake. In terms of AI, and by the way, when I saw you at that conference, which was 18 months ago, I fully expected to own it for years, but I think it was 300 and change. And as I also said at a media interview, I'm not Warren Buffett. So I thought I was going to, but what changed is it tripled in a year, and I thought the valuation was rich. We are long-term believers in AI, and there's still many ways we're playing AI, particularly the infrastructure that's been built out to support the power needed. And yes, I think NVIDIA is a wonderful company, and were the price to come down, we get involved again. But right now, I'm licking my wounds from a bad sale there.
This was pretty crazy to see. So a lot of people that are here in the stream might not know that Druckenmiller sold NVIDIA a long time ago. He sold it when it was at 900. They started buying at 150. As he said in there, he was up 3x in under a year. So he had to take some profits, right? Which makes sense. If you're a fund manager, that is the prudent thing to do. I mean, most fund managers can barely get 15, 20% a year and beat the S&P. So if you're up 300% in a single equity, you're probably going to take some profits. Also, people that don't know Druckenmiller's history, he lost, I think it was a couple billion in the dot-com bubble because he didn't believe that there was a bubble and he just kept piling in even when things were collapsing. And that was one of his biggest lessons. So it makes sense for someone like that who's seen bubbles get bubbly and then pop and then be the person who loses everything when it pops to take some risk off the table. However, for him to acknowledge that, first of all, big respects to him because a lot of these people have big egos. So the fact that he's admitted that is a very important thing. But for him to acknowledge that right there, it means his team and the hundreds of researchers that he employs to try to come up with conclusions around where they should allocate billions of dollars of capital have come to the conclusion that selling at 900 was the mistake. Not because the stock's at 130. I don't think they're doing kind of hindsight bias. Oh, the stock went up, therefore, we could have made an extra $40 a share, and that's the issue. I think they're realizing the AI demand story, given what we saw with TSM earnings, is not slowing down. And if it's not slowing down, the broader question becomes, how big can NVIDIA get? Right now, NVIDIA is going to open up at about 3.5 trillion, I think. It's going to be the most valuable company in the world if it holds on to this level when the market opens at 930. Yeah, 140 in the pre-markets. There you go on NVIDIA. Congrats to long-term NVIDIA holders, especially if you bought that dip on August 5th. You're looking at 140 from about 90. If NVIDIA gets to 6 trillion, which is round about $200 a share, and Druckenmiller sold at less than 3 trillion, that is a big opportunity cost. So now what he also said at the end of that clip is that they're trying to find other verticals to play NVIDIA. And one of those verticals is Palantir. And he has about 745,000 shares of Palantir at a $21 average. When we see his 13F come out, I think in like 2 weeks, we're going to find out if he sold that Palantir on the run up to 40 or if he added more. And so we'll kind of see if the AI software application is where he's going to try to play the broader AI sector. But it was a big deal for Druckenmiller to admit that they messed up on NVIDIA. And I think for those that have been saying NVIDIA is a bubble, the Blackwell demand that Jensen's been talking about, the broader ecosystem of client partners like the Qualcomms, Broadcoms, and today what we saw TSMs of the world showing like legit numbers, not fairy tale and like stories, but like real numbers that is all based on this one company, NVIDIA, setting the framework and landscape for demand. It seems like this thing is not stopping. Could we see pullbacks? Sure. And we did get a nasty pullback on NVIDIA from 140 to 90, right? We saw that happen. Even after earnings, it fell like 7-8% because the market was kind of in NVIDIA fatigue. But now as we get to the end of the year with earnings coming up and with the broader macro showing continued strength with retail sales data, jobless claims, oil prices, China stimulus, etc. Oh, the ECB, they lowered rates today by 25 basis points for the second meeting in a row. And the European Central Bank, they said, and then we'll talk about Palantir. They said, I quote, we did this because incoming data shows we are well on track to reach our inflation goal. Central banks across the world are deciding that monetary policy needs to get some loosening because they've been too tight for too long. And it's done what they need to do with inflation. Also, I think it was the United Kingdom's inflation yesterday came in at 1.7%. It was the lowest in like 3 years, if I'm not wrong about that. So that also was a big, big deal. We're seeing inflation across the world come down, which is very, very important. Yeah, inflation in the UK falls to 1.7%, below the Bank of England's target, which I think was about 2% for the first time in 3 years. You got more liquidity opening up. You got more money that can be allocated into different asset classes like equities and cryptos. And you've got the Federal Reserve that is likely looking at the rest of the world start to cut rates. And I don't think we're going to get 50, but I do think we'll get another 25. That was going to be very bullish for the broader economy as well. So we got some momentum. Which is not bad at all. Now, Q3 earnings. Let me do a little bit on this, and then quickly we'll get into Palantir. So I don't know how much you guys have been keeping up with Q3 earnings. We've had TSMC today, which was one of the biggest ones. But take a look at what we had 2 days ago. I think this was on Monday. We went 9 for 9. All 9 companies that reported in the morning: Bank of America, PNC, Goldman Sachs, Citigroup, Progressive, United Healthcare, Walgreens, Charles Schwab, Johnson & Johnson, and State Street. They all beat on the top and the bottom line. Now, that doesn't mean all of their stocks did well. United Healthcare, I think, fell the worst it did in like 15 years. Walgreens went up the most it did in 15 years. So obviously, United Healthcare was already up 30% for the year. It was kind of priced for perfection. Walgreens was down like 70%. So it was probably going to have nowhere to go but up if they had some decent numbers. This made me really excited on Monday, because when I'm looking at Q3 earnings, and I know most of these are financial companies, you got some insurance there, you got some healthcare there, you got some pharmaceuticals. I know most of these are financials, along with JP Morgan and Bank of America that absolutely crushed, along with Wells Fargo and Morgan Stanley and Goldman Sachs. You just have a lot of banks putting up numbers that are quite incredible, even though interest rates have not come down that dramatically. And for all the people saying that this is some horrible bubble, there was a recession on the way, I'm not saying that there isn't some recession that could come out of nowhere, or that could be compounded based on certain metrics going the wrong way, or something happened in the Middle East, all that stuff. But you do not see almost every company that was reported and part of the S&P 500 beat on the top and the bottom line so far. Earnings are not the concern. We're concerned about guidance. If you look at the earnings from all those companies, their guidance has been strong as well. So, and again, a lot of these stocks that have been going up, they're not going up just based on Q3 earnings. They're going on guidance. JP Morgan literally raised their net interest income fiscal year 2024 guidance after this result. I think it went from like 87 billion to 92 billion, something like that. Bank of America raised their guidance. Johnson & Johnson maintained their guidance, or they raised it by, I think, like 0.25%. The point is, we've seen momentum by a lot of these companies, and it makes sense. If you're a bank, you should be raising guidance, because interest rates coming down, although your net interest income goes down, the tailwind of volumes when it comes to the amount of loans they can give out, which I think 2025, and we'll talk about SoFi, is going to be very big for loans, should be going up. And that's what we're seeing right now in the context of the banks. TSM, again, where we're talking about guidance, right? TSM just raised their guidance from 23% to 30%. They raised their guidance by $1 billion from 24 to 24.9 to 26.1. And NVIDIA, I'm assuming, is going to do the same thing. I'm assuming SoFi is going to have massive guidance as well going into Q4 because SoFi wanted rate cuts. They got rate cuts. We'll talk about SoFi in a second, and that is probably going to be a macro tailwind for them. So all I'm trying to say here is that being objective and acknowledging the bear case, which is still very real, it's harder and harder to see it materializing, at least now, or at least over the next couple months. Maybe 2025 is where you get a kind of sustained pull down over, whatever could happen after the market goes up a lot, because it's hard for the market to keep compounding at 25%. Q3 earnings so far is making me feel that we have momentum, and that momentum is not going away anytime soon if the Q3 earnings continue to hold up. Now, look, we've got Netflix today. We've got what is the other one? We got Tesla on Wednesday. We've got all the other, I'll talk about Robotaxi in a little bit. We got all the other big tech companies, I think August 25th, 26th, 27th, going into the first week of November. So we do have a lot of companies that still have to report. And, if Google shits the bed, then that's not going to be good for the economy, right? So we have a small sample size right now. But in that small sample size, which are banks, which are very important because they control capital spending, and they're raising their guidance, buying back shares and saying, hey, we're doing good. It's hard to be super skeptical of the broader economy, given that the biggest concern going into Q3 earnings was Q3 earnings. And although it's been a week of just starting, it seems like Q3 earnings have not been too bad. So that's what we got with Q3 earnings. We'll see how it continues to go forward from there. You got NVIDIA right here up 3.27%, S&P 500 0.6%. S&P 500 now a new 52-week high in the pre-markets at 586. And it seems like it's going up based on that TSM data, which is showing that there's going to be more demand, more growth for the broader economy. Look at CrowdStrike, dude. Everyone thought CrowdStrike was a dead company after that Y2K event on July 19th. If you bought the dip on CrowdStrike, you're sitting pretty happy right now because you got CrowdStrike here at 311. It's still down from that 350 level, but most people bought the dip under 300. A lot of people bought the dip in the 230s to 250s. And so you got CrowdStrike, which is one of the most important companies in the world. And we saw that in July get some momentum as well, because they have increased their guidance and they've only decreased certain parts of the customer issues they had by about 60 million. And 98% of their customers stayed with CrowdStrike even after the crazy thing that we saw. Affirm, I don't think Affirm had earnings yet, but Affirm CEO was on CNBC yesterday, and they said, I quote, "Every customer is paying back our loans." And so I don't literally think they mean every customer is paying back their loans, but what they're saying is metaphorically, we are not seeing massive defaults and delinquencies in regards to our loan growth because people have the money because they have jobs to be able to pay back their loans over time, which is the whole concept of Affirm. You buy now, pay later. And as long as Affirm doesn't have significant charge-offs, then they're going to be a business that's pretty healthy. And I think next quarter, they're going to be GAAP profitable, which is another reason the stock was up 40% last month. So all around the world, and then you got Rocket Lab. Dude, I didn't even know Rocket Lab was up 12% yesterday. Like, I just didn't look at Rocket Lab at all. It's $11.19. Like, when did Rocket Lab get to $11.19? But there it is. You got SoFi. We'll talk more about them in a second. SoFi right here at $10.09. Nice surge from about $7.50. Those options I got for the 15-20 Jan 2026 spreads, those were up 100%. And I thought about taking my initial, but then I thought about Noto and guidance and rate cuts. And I'm like, you know what? I think I'll let that play out. And I think 2025 is going to be a macro tailwind for them. So I'm holding on to those. And it seems like you're just seeing a lot of momentum across the entire economy, which is very, very important to keep this bull market continuing to do what it needs to do. Melanie, good morning. Good morning. Thank you, everybody, for being here. Are you in solitary confinement? I am not. I am in one of the rooms at my grandparents' apartment. There's a bunch of luggage and stuff in the back. That's why it's kind of a mess here. But this was the only place I could stream from. And so that's why I am streaming here today. All right. Let's talk about Palantir. So first of all, let me ask this question to the chat. Let's do a poll. I think a lot of people are talking about this on the Twitter webs, and I'm curious what you guys have to say. I know my audience is a bit more biased towards Palantir, so I think this will be a healthy poll to do. And the question I want to ask is also HIMS. Yeah, 20% in 5 days. Shout out to HIMS. I think they had some report come out of, or the FDA came out with that whole, like, we're not banning Ozempic stuff. And that surged HIMS from like 14 to 22 over the past couple of weeks, which has been very good as well. Okay, is Palantir in a bubble? Is Palantir in a bubble? That is the question to the chat. What do you guys think? Is Palantir in a bubble? Let's talk about Bitcoin miners. We will talk about crypto in a little bit as well. Crypto's been confusing. Crypto's been very confusing. We saw 68K. Where are we at right now? Bitcoin 67.1. I think we're in the cycle, and I definitely think we bottomed at 59. So I don't think crypto is going to have too much pain, but it is a little confusing what's happening around with crypto. So we'll talk about it in just a little bit. Do we think Palantir is in a bubble? Let's see the results of the poll. No. All right. So we got 60-40, no versus yes. I agree with the no's. And the reason I agree with the no's is quite simple. I put out this post yesterday. I'm curious to see how many people agree with it. I kind of made up this definition on the spot. So it's a mid definition. I don't know if it's like a truly intellectual definition. But I classify a bubble popping. And the reason I bring up this bubble conversation is because a lot of people are concerned about Palantir's valuation, rightfully so. Obviously, it's expensive. We've been talking about that for a long time. But I classify a bubble as negative 50%. That is my unofficial, official definition. I think that's reasonable too. I think it's a reasonable definition to say, hey, if a stock falls by 50%, it was in bubble territory at the peak. So if Palantir goes back to $29 from 44, if 44 was the peak, we'll see, after Q3 earnings, if we can make that surge to 45.50 if we deliver decent growth, then I'll admit, yeah, it was a bubble. And I'll admit that with no shame. I'll be like, yep, going to 44 was a bubble. However, I don't think it's going to be that easy to get back down into that $20 range, $29 range, from call it $25 to $29, simply because I don't think it's a bubble. I think it's an expensive stock that is inside of a macro tailwind, which is AI momentum. And if AI momentum is not slowing down, you just saw TSM's numbers again. I sound like a broken record saying this, but for the people that are new to the chat or people that are new to the channel and want to understand the Palantir thesis, TSM showing momentum is good because they make the chips, or they make a lot of the parts of the chips that ultimately result in the GPUs for NVIDIA. NVIDIA's demand is really good because it reflects that the broader market is accepting AI. But NVIDIA's demand means nothing. I will say it again. It means absolutely nothing if there is not a use case from those GPUs. And that's why Jensen was in New York City over the past couple of weeks, and he was talking to all these investors from JP Morgan, Morgan Stanley, Goldman Sachs, trying to convince them the number one question from the reports that I've been reading were them basically saying, hey, Jensen, like, where's the ROI? When is Meta going to grow 30% because of the 600,000 GPUs that they bought? And Jensen basically spent the entire weekend explaining to them what the ROI would look like. And that is why NVIDIA is surging from 125 to 140 right now, is because the market kind of woke up again after being reminded again by Jensen that there is a use case to AI. And I'm not going to go super deep in talking about it. Obviously, we've seen Palantir's AIPCon. We've seen all the operational workflows from AI. We've seen all the agentic architectures that have been described by people like Mark Benioff and Shyam Sankar on CNBC last week around how they're delivering value. All of that seems to be very real in my opinion. My use case of ChatGPT is very real versus Google. And so Google, traditional Google search. From that perspective, if you think that's the case, I'm not saying that justifies Palantir at 95 billion. What I am saying is I can understand the market believing that that is a multi-trillion-dollar, decade-long story of growth. And if Palantir is one of the only software names in that sector, then Palantir is going to win. So those are my thoughts on it. I don't think it's a bubble. I think it's obviously expensive. I think buying at 43, 44, your risk reward is not amazing after going up 150%. But buying NVIDIA at 140 doesn't have an amazing risk reward either. Because like NVIDIA's up now 170%. And I think that's fair. I think that's very fair. Doug says right here, if you were to get a 50% pullback, that would be your best friend. Well, that's the other thing. If we get a 50% pullback on Palantir, classifying Palantir as a bubble going up to 44 and that bubble popping by collapsing 50%, I also think a lot of people would buy that dip. Here's another reason I don't think we get to 40% or 50% drawdowns. If we get to 35, which would be a 25% drawdown, or 33 or 32, I just think there's going to be even 37, 38. I think there's a lot of people buying the dip. I mean, we're seeing it this week, dude. We've held 40. If we end out, we got 2 days left in this week, Thursday and Friday. If we end out this week at 40, we have held 40 for 2 weeks, folks. We have held 40 for 2 weeks, which is just incredible. If we even end the year anywhere near $40, I think it would be just incredible because all of us acknowledge that the valuation is getting up there now at 40. So the final kind of point on Palantir is what really determines all of this is going to be Q3 earnings. And if Shyam and Karp can put up higher than 30% growth, I think we maintain the momentum, if not expand it. Expanding the multiple will be hard from here, but I think at least maintaining is important. I don't think the market's expecting like 50% growth. And if they are, then we're not going to deliver that, and be ready to see some pain because I don't think that's going to happen. But I don't think the market's expecting that. I think the market wants 30%, maybe 32, 33. We guided for 25. I don't think we're going to do 25%. I think we're going to get to 30%. I think the company knows how important that 30% number is from a psychological perspective. And free cash flow margins are going to go up. Adjusted operating income is going to go up. Our cash on hand is going to go up. We're still going to have no debt. All the fundamentals are going to be great. All we have to do is show continued growth. And if we do that, I don't think we have to have a drawdown of 50%. But if that happens, I do think that it would be a decent opportunity to buy the dip, especially if we fall simply based on, the market not liking the growth versus the growth not being there. We did get an update by Mizuho. So Mizuho, here's how the analysts are thinking of Palantir. They are very confused. Mizuho said, despite Palantir showing good recent execution, we remain concerned by the lack of visibility into its business. I don't even know what that means. Because, I mean, from my understanding, Palantir has been one of the most transparent companies in the world. The only thing they haven't been transparent about is the AIP customer conversion rate, which I think they shouldn't be transparent about that yet because that's like something very confidential. If you release that information, their competitors are going to be able to do a lot of sort of tracking on what their conversion looks like, and they may be able to penetrate different customer segmentations that they're getting into. So I think they should keep that under wraps for a while. As an investor, I would love to know that. But I also don't want them telling the world how many exact customers they're converting from these boot camps. As long as you increase top-line revenue, and we'll know if top-line revenue is like below 25%, we'll know the conversion sucks. If that's above 25% going into 30%, the conversion's fine, but you don't need to give away that exact number. They also say, we find the current valuation indefensible. I'm not going to argue with them. I don't think it's indefensible, but I do agree that it is expensive. We raise our price target to 30. It was 24, but reiterate our underperform rating. That last sentence to me was pretty hilarious because they can't really justify why they're raising it to $30, but they're raising it to $30 because they think 24 is too low. I mean, that is the definition of an analyst being like, hey, we were totally wrong on this. We have to raise it by $6, which is increasing it by $15 billion in market cap. We don't know how we're getting this $15 billion in market cap, but we do believe that it deserves to be higher, even though we're wrong on the broader story. Again, I think this is the conundrum that a lot of the people trying to analyze Palantir from the retail, institutional, and the analyst side are facing, which is there is a broader secular story around AI growth, and no one knows how much Palantir is going to grow over the next 5 years. The bulls think it's going to be upwards of 50%. The bears think it's barely going to be 20%. And so the market's kind of in this world where it's like, well, I guess we're going to bet that the broader growth will happen, and that's why they're giving them the premium. And now it's just a question of if that growth is going to happen in order to see that momentum. And so if we see that, I think we'll see some broader understandings of Palantir, but the growth has got to be there. And then I think people like Mariana, Dan Ives, all these people that have been pretty much right. You can have whatever opinion you want on these guys. They've been right on the story. I mean, they've been right. On Palantir, they've been right. And because they've been right, I think a lot of the other analysts will follow the thesis that they're laying out if Palantir can put up that growth. And if they do, then that'll be very exciting. Doug says, let's not discount how bad Twitter and YouTube are going to be once there is a Palantir 20% pullback. Yeah, I mean, I think a lot of Palantir YouTube channels and Twitter accounts are starting to pop up, and you guys are probably seeing that all over your feed of people saying Palantir is the greatest thing in the world. I don't like that. I honestly, it's not exciting to see that because that does feel very bubbly because you don't have people going into it, like starting a YouTube channel just on Palantir if they didn't think there was this like massive attention they could get from doing that, which is not good to see. However, I think in the broader scheme of those channels surviving, if we have 20-30% pullbacks, which happen in every company in the stock market, I don't know what those guys are going to be able to say in their videos, because the only thing they say in their videos right now is Palantir is going up to the moon. You have to buy it, which is like not good analysis in my opinion. So I think eventually those will get weeded out, but I don't think that is a broader indication of the growth story being hurt. And if that's not the case, then I think we will continue to see some more momentum. Okay, cool. That's what we got with Palantir. Let's analyze Robinhood. We got 8 minutes left, and then we'll get into the market open. We got to talk about SoFi. We got to talk about some more AI stuff. We got to talk about some more macro stuff. But let's do that final Robinhood segment before we get into the market close. Look, I really like the event. Arnie and I were up for 3 hours last night analyzing it. I don't know what's going to happen to the stock. We got 26.92 in the pre-markets. I think that they basically put their foot on the ground, and they showed that this is the next S-curve of growth that they're heading for, and it is the future of active traders. Here's a small clip that I want to show you guys of what you can utilize this platform to do and how traders might see a differentiated approach to start bringing over their assets to use Robinhood's trading platform. And you guys can kind of get a glimpse of what this trading platform ultimately looks like.
Cool stock. And then go back to a week. And then let's draw maybe a demand zone. About right here. Yeah, there we go. And then let's just extend it out. And then let's say we actually want to place a trade. So I don't have to go anywhere else. I can do it
This is for Tesla stock.
directly from the chart. So all I have to do is hit the plus button here, press buy limit, and our order's placed. Pretty cool. Super smooth.
That's cool, isn't it?
Yeah. Now let's try to get a fill. So I don't have to cancel this order, place a new order, and all that stuff. All I have to do is drag it above the current price, make it marketable, replace it, and we've got our share of Tesla. Pretty cool.
That was really great to see. So do you want to show them some?
So I'll link the event right here. You guys can watch it even further. But that part to me was the most important. We were trying to figure out what is the differentiation of this product. Arnie and I last night were trying to see, like, why would active traders, people that have seven-figure account balances that are trading hundreds of times a day, why would they use why would they use Robinhood? Shout out to Chad. He says, where's my emit button in the app to tell me when things are red or things are green? That would be funny. If they had an emit button, you could press this and it would just scream when things are red, things are green. One of the things we saw from that demo right there, those 30 seconds, is that you can trade on the charts itself. And that, I think, is a very big deal. So far, when you use TradingView, you have to hook it up with Schwab and Fidelity. The only brokerage that TradingView connects to is IBKR. A lot of people use IBKR, but much more people use Schwab and Fidelity. So what we got feedback from last night in the chat from the active traders that were with Arnie and I was, hey, we use TradingView and we connect it to Schwab and Fidelity. Like, we can't connect it to Schwab and Fidelity seamlessly. We have to like use the chart and then go to Schwab and Fidelity and place the order. On Robinhood, if you love the chart and the only thing that's been keeping you away from Robinhood is the fact that they don't have advanced charting, and then they have this big chart, and then you can like kind of buy and sell right there in milliseconds on the chart itself, which can hopefully expedite the level of trades you can do and make you more efficient and productive. I think that is a differentiated product. Now, I say that with some skepticism here because I'm not an active trader. And over the next couple of weeks, I want to talk to a lot of the people that are trading hundreds of thousands of dollars a day and ask them, would you actually switch? Because that's really that. I mean, it's black or white. Either they're switching or they're not. And if they're not switching, Robinhood is going to have to rely internally on their users to become active traders over the long term. But that's not enough, right? You need people that are already actively trading to come to the platform in order to have that heightened growth from this product, which will increase trading volumes, increase margin balances, increase transaction revenues, and then increase top line revenue as well to get the stock to go higher. It'll increase EPS estimates for a lot of the analysts as well. But those people have to switch. So I'm still skeptical on how many people are going to switch. In terms of the product itself, it is absolutely beautiful. I literally next year, 2025, I want to upgrade my studio. I want to get like 4 screens just to be able to look at something like this because this looks really cool, or one like really big long screen so I can have multiple charts and everything in front of me. And it just looks like one of those things that if you are someone who engages in the markets on a daily basis, even if you're not literally actively trading like myself, but I'm looking at multiple charts, I'm constantly looking at price to earnings ratios, I'm looking at what's happening with Alibaba versus what's happening with Palantir versus what's happening with NVIDIA. If I could see that all at once just by my screen without having to switch through multiple things, then I see value in that. And I see value in a lot of people wanting a sleek user interface that is just highly differentiated just from a design perspective, forget a functionality perspective, to get people to switch on to a platform like this. And that's why I think it's exciting. And that's why I think there's going to be a decent amount of momentum in the context of what's happening with Robinhood. Now, final couple things, and then we'll get into the market open. Number one, they're doing a 2% match for accounts if you have a $10,000 margin balance. I wrote about this last night on Twitter. I think this is the smartest idea in the world. Basically, they're saying, hey, if you have $1 million, we'll give you 20,000, not 10,000 if you come over to Robinhood. But out of that million, at least 10,000 has to be in margin. Why? Because Robinhood charges about 6% for margin. So if they can get a lot of the big guys, like the Chris Camillos of the world that were on my channel that heavily use millions and millions of dollars of margin in their portfolio because they're active traders, momentum traders, and they come over to Robinhood. By the way, Chris had a tweet last night that said Robinhood and Bitcoin are going to likely be the biggest winners of the wealth transfer narrative that's happening. And Chris has not been the biggest bull on Robinhood. So for him to say that seems like he was impressed by the event. Those people coming over to the platform and paying for margin is where Robinhood's going to make back that 2%. They're going to incentivize their margin balances to go up. It's already up from 3.8 billion to 5.5 billion, which is dramatic growth in the past 4 months. And that's where I think they're going to make up a lot of the net interest income that they're going to lose from interest on segregated cash and deposits when the Fed continues to lower rates. Again, they lose $40 million every 25 basis point cut. Robinhood has told the market, hey, our transaction volumes are going to match that. I think margin balance interest revenue is also going to match that as well. And that's going to be how they continue the cycle of growth that they're on right now going into 2025. So overall, I think there's going to be a lot of momentum. There is mixed reaction on the actual trading app. I do think from what I saw last night on Twitter, there was like, I would say 70% of people that were like, oh my God, this is so beautiful. This is nice. And then you got 30% of people that are actually more in the active trader community. And they're like, hey, these features are kind of old. We still like Webull. Thinkorswim is still better, yada, yada. So I think Robinhood has a lot of work to do over the next couple months to really innovate and bring some new features, get people excited. And, the people that I talked to last night, that 2% on, a couple $1 million is very enticing to switch. If the only reason you didn't switch is because the chart features sucked and you were kind of a little afraid of Robinhood being a kiddie platform, now that it's leveling up, it does seem like there's going to be a lot more momentum. And if they can bring over those active traders, you're going to have sticky deposits. Sticky deposits will lead to sticky trading volumes, transaction revenues, overall top line revenue growth. And I think the growth story will be in check. Is 27 cheap? Yeah, I bought at 27 yesterday. I've been buying a lot this week. I bought all the way from 25 to 27. I've been posting that on Twitter. I think it's cheap. I think with $5 billion in cash, enterprise value of 20 $3 billion, growing 40%. There is some momentum there. So my price target was 25 for the year. We've gone beyond that. I think new price target around 30. And if we continue to hold this momentum and the market holds up, then I think Robinhood should be able to get to those levels. All right, here we go. It has been so long, but we are here once again, ladies and gentlemen. The stock market is now open. Wake your asses up. Here we go. Let's get into it. Robinhood, $26.89. I would not be surprised to see a bit of a sell the news today or see some momentum to the upside. We'll see what happens. $28.39. We did hit on Robinhood yesterday after hours. I do think 28 to 25 is the range we could kind of be in, either we on a sell the news or on a buy the momentum. But I think that's what we're looking at for Robinhood. Palantir, $42.26, up about 0.76% on the day. NVIDIA, 139.80. I think NVIDIA really wants 140, but psychologically 140 is going to be hard to kind of break through and hold. So let's see if we can get to that 140 level. S&P 500, new 52-week high at 585 on the day. TSM, wow. TSM is now a $1.07 trillion company, going up 9% after massively beating on their guidance and on their top line earnings. We got Star Buccaneer saying, I can't believe I missed hearing the bell. I know a lot of you say that you mute the stream when I ring the bell. Even my 13-year-old cousin says, hey, when the stream is on, I have to tell my uncle, tell his dad to mute the stream when the bell comes on. But I know you missed it, and that's okay. Delta, 55. JetBlue at 703. United. Did anyone take a look at United yesterday, bro? United was a $50 stock for like the past 4 years. United jumped up yesterday to $77. Just an incredible earnings that they've shown. Obviously, oil prices going down is really good for United, but they had a great earnings. Travel demand seems to be good, which is a decent sign of the health of the overall consumer and of the overall economy. And you're seeing some momentum with United. Google at 165, Meta at 583, up about 1.2%. Snowflake at 119, AMD at 159, Carnival Cruise 2145. If you're on to the cruise lines, this thing is up, I think 6-7% this week. So the cruise lines have done pretty well, probably because the airlines are doing well. So travel as a growth story for both of those vectors, or both of those industries, seems to be on track. CrowdStrike at 309. We got Silver here at 28.94. DocuSign also 52-week high at 72.65. They had a decent earnings. They were also added to the S&P 400. I believe ExxonMobil is up a little bit. XLE Energy Index is up a little bit as oil is up about 0.5%. SoFi down about 2.79% on the day. We'll talk more about SoFi. SoFi right here at 980. Robinhood now down about 0.5%. 26.78. Palantir up 1.5%. Qs 495. They're up 0.97% on the day, which is not too bad. Where is the lab of rockets? Rocket Lab, $10.97. That one is down about 2% on the day. Semis are all green. Look at the left-hand side of my screen. All of them. AMD, NVIDIA, which is 10 cents away from 140. Let me try to pull up the order flow resistance on NVIDIA because I want to see how much 140 is going to be hard to break through. TSM up 9%, Qualcomm up 1%, ARM up 2%, Lam Research up 1%, Dell up 1.7%. All the semis benefiting from TSM. Yeah, at 140, oh my God, 1.64 million shares are waiting at $140. Talk about a wall. So that is $230 million are waiting to be sold off, to be bought up at $140 just to get NVIDIA to crack through that 140 level. So we're gonna need some big buyers to come in and buy up some NVIDIA. But we got NVIDIA right here up about 2.8% on the day. We got Palantir 42.31. Shyam Sankar did have a new interview today. We'll play some clips of that. It wasn't on CNBC or anything. It was in some like conference he was at, and he was talking more about the defense side of the business. MicroStrategy taking a bit of a hit. So MicroStrategy ran up to like 227, and then the net asset value is trading at almost a 3x premium to Bitcoin, which is a little expensive. So you're seeing MicroStrategy sell off probably because that premium is taking a break. But look, if you bought MicroStrategy at $100, I don't think you can be upset. If you bought it at 130, 140, even 150, I don't think you can be that upset as we're seeing momentum in MicroStrategy based on Bitcoin, basically going from 58,000 to 67,000 right now. Bitcoin just under 67 at 66.8. You got Tesla at 219. I'll talk about Tesla in a second as well. A robotaxi event was very interesting, and there's some stuff we have to go through on that. Alibaba at $100, down about 1.5%. We'll also talk about China because China has had some issues. And then you got Robinhood right here, 2650 down about 1.52% of the day. So far, sell the news on the Robinhood event. We'll see if that dip gets bought later throughout the day or if we see some more pain. But holding above 25, holding above 2650, I think is decent on Robinhood right now. Someone says, Amit, I have 442 shares of NVIDIA for $110 each. I'll be holding for the next 10 years. Look, I don't blame you. The growth story is there. And look, I don't know if it's a 10-year hold, just given I don't know if this demand is going to hold up for the next 10 years. But I think at least until 2025, you're going to see the demand continue to have momentum. And then the moment the street thinks that the demand is waning off against their expectations, we're probably going to see some volatility. I think it's so sensitive, the entire semiconductor sector, that we have to be prepared for that. But going into 2025, especially going into these earnings, if we don't have a recession, it does seem like the demand is not going anywhere for NVIDIA. Let's look at the Mag 7. Apple, I was surprised. Apple was at almost 52-week highs yesterday at 236, 235. So I don't know if the street thinks iPhone demand is going to be good or the street's just like, screw it, it's a bull market, we're buying Apple. I kind of think it's the latter over the former. But Apple right here at 231, Microsoft at 419. Microsoft's been kind of flat over the past couple of weeks. Meta at 580. Meta did hit 600. Google at 166. Amazon 187. NVIDIA 138. And then Tesla right here back down 1.2% at 218. Tesla taking a fall from basically 250 to 218 after that robo-taxi event. For Real says, Amit, isn't the larger concern a potential resurgence of inflation? The Fed easing while the economy remains robust and assets are flying. How does this not lead to a second height cycle sometime next year? It's a very good question. I think there is a legitimate concern that inflation could reaccelerate. However, I think we're seeing some things come to the downside that is helping me feel less bearish on inflation reaccelerating. And one of those things is something that just fell by 0.5% after being green by 0.5%, which is oil. Oil is coming down, folks, and it's coming down aggressively. The reason oil came down last week is not only because Israel said they're not going to launch missiles on Iran's nuclear or oil sites, but also OPEC cut its demand and said that we just don't see the need to have as much oil because we're going to see demand slowing down. And so if you already know the Saudis are pumping more and demand is slowing down over the next 2 years, we have Matt Money, who's a friend of the channel, who is someone who works at an oil company, and he's sold off all of his oil stocks, like literally liquidated his entire oil portfolio because he sees a bit of a bear market coming for oil. I think that is where you get inflation to keep coming down. The energy sector. Now, are there other sectors that are reigniting a little bit? Yeah, we saw airline fares go up. We saw apparel go up. We saw Medicare go up, or medical expenses go up. But I don't think we're seeing 2.4 go back to 3%. I think worst case we hover around 2.5, 2.6 if we get to those levels. I think more likely than not we stay around 2.3 to 2.4, and then you got the Fed that's going to ask themselves a question: do we really think we want to not cut rates off the fear that the labor market actually starts to deteriorate, which so far the labor market has held up decently, right? And in August, there were concerns that it was going to go really bad. And so far it's held up okay. You can see the CME Fed Watch Tool on November 7th, which is 2 days after the election. You've got the Fed futures estimating that there will be a 90% chance of a 25 basis point cut versus a 9% chance of a 50 basis point cut, which is reasonable. I think that's very reasonable. And if we see that we have a decent amount of rate cuts still throughout the rest of the year, even if it's not 50 basis points all at once, but 25 and 25, then I don't think we need to see inflation reaccelerate if job growth is good. The broader question here is consumer spending, which retail sales came in higher than expected this morning as well, which is good for the market. Is consumer spending so vast that people just can't wait to buy as many laptops as they can, and that's going to increase the prices of laptops, right? Because there's so many people buying. I don't think that's happening. I don't think it's kind of a COVID story. Is there something happening in the broader supply chain ecosystem with Russia and Ukraine or the Middle East that's going to create so many bottlenecks for a supply chain that's going to create a resurgence in inflation? I don't see any of that happening. So if you don't see any of that stuff happening, it's just hard to imagine inflation comes back. And if it doesn't come back as aggressively, Palantir right here at 42.15, then I think the Fed's going to be okay to cut, and I think that's going to be good for the broader markets. S&P at 583, selling off just a little bit right now. Have you guys noticed at 10 a.m. every day, we've seen a decent sell-off, like almost 2 to 3% down across the entire market? 10 a.m. versus 10:30 every day this week, I've seen algos come more into effect, but then it recovers towards the end of the day, and it's been maintaining momentum. QQQ at 493, TSM now up 8.9% of the day, S&P at 583, NVIDIA at 138.58 right now. When is the trading desktop app available for Hood? So I was one of the first 1,000 people by pure luck, to be honest. I logged into, I think it was because of the chat. You guys told me in the chat yesterday, hey, Amit, the like trading app is live right now. And I logged in. And then right when I logged in, like 30 seconds later, Vlad on the live stream was like, the first 1,000 people who log in have access to it. And I guess I was one of the first 1,000 people right before he said that. It ran out in 46 seconds, the spots. So 1,000 people have access to it. I imagine they're going to roll this out sooner than the credit card. I know people have been annoyed that the credit card has taken time. The credit card is a little bit different. You have to do underwriting. This is not really underwriting. This is just like making sure there's not bugs. So I do think it'll roll out soon. And when it does roll out, I think a lot of people will be able to get more benefit from it as well. SoFi. Let's do a quick segment on SoFi, and then we got Vlad on CNBC. Let's see what he has to say. Okay, SoFi. I'm bullish. I'm bullish for a couple reasons. Number one, they've released back-to-back 4 press releases over the past week, all of them having to do with different things in the lending business, different things with Galileo. We got some tech updates yesterday on the B2B side of the business. They're doing this new sponsorship with Venus Williams. They're doing a lot of different stuff. I think that's bullish. Number two, there's 180 million shares sold short. And I think the shorts are finally starting to get a little scared. And I think if Noto can have a really strong earnings with strong guidance, those shorts are going to cover. Now, I could be wrong. And the shorts might double down. And SoFi, the whole narrative of them just being a bank, yada, yada, all that stuff might get back into effect, might become mainstream. And SoFi goes back down to 750 and it's back in purgatory. I don't think that's going to happen because I think we have rate cuts coming up. I think SoFi is showing momentum in their lending business. And I think Noto is going to show good Q4 guidance, which means if that happens, then I do believe SoFi is closer to $12 by the end of the year. That's kind of my new price target in regards to SoFi. Could I see us kind of hovering around $10? Yes, but I think if the S&P 6,000 and all the banks, which is another part of my thesis on SoFi, every single bank has done phenomenal. Like just incredible. I think Wells Fargo is one of the only ones that missed EPS estimates, but I have not seen an earnings where every freaking bank, pretty much all of them are green right now. Truist is down about 2.34%, but they had a good earnings this morning as well. Beat on the top line and the bottom line at the same time. Like I just haven't seen that in a couple of earnings cycles. And although Buffett's been selling so much Bank of America, now he doesn't have to report when he sells because he's under 10% ownership, which means he's probably going to sell a lot more and we're not going to know about it. Even Bank of America is at a higher price than what Buffett's been selling at. Buffett's been selling at 38, 39. Bank of America's at 43. I mean, it's got to be pretty damn crazy for the largest shareholder of Bank of America to be selling almost 5 million shares daily. And for the street to be like, yeah, we're going to buy that up. We don't care. Like, we think Bank of America is in a good spot. It's just incredible. And so if all the banks are doing well, I think SoFi is going to do well. I think they're going to show good growth. And I ultimately think that Noto is going to have good earnings. Now, look, if Noto doesn't communicate on earnings in a way that makes the shorts scared, i.e. an Alex Karp kind of, hey, the shorts are on cocaine. He doesn't literally have to say that, although if he did, that would be pretty cool. If he doesn't communicate like that, that would have me worried if we see the stock kind of sell off after earnings and you don't have that kind of meaningful commentary by the CEO. Now, look, Noto's not the type of guy to do that. I get it. He's a Goldman Sachs veteran. He doesn't talk like a guy with crazy hair. I understand. But I really do think this, if there was any earnings to like put your foot on the ground and be like, guys, like, this is legit. This is real. This is a real story. It's a growth story. It's time for us to be out of this 3-year base that we've been stuck in from $6 to $8, which is another reason I'm bullish because I think on the technicals, it's breaking out of its base. Then I think now would be the time to do it. And so I'm holding on to my SoFi options. I thought about taking out my initial the other day, but I said, you know what? It's $3,000. It's not that big of a deal to take out the initial right here, especially if SoFi has some more momentum. Maybe if we get to 12, 15, I'll take out the initial. But do I see 12 to 15 happening? Yeah, I think mid 2025, I think that's very possible. And 2025 will be a macro tailwind for every bank when it comes to lending, which is going to be really important. And that should be good for SoFi as well. So those are my thoughts on SoFi. All right, here's Vlad on CNBC on this new trading app. Let's see what he has to say.
Products for advanced traders. Joining us right now, first on CNBC from the first ever Hood Summit in Miami is Robinhood co-founder and CEO Vlad Tenev. Vlad, it's great to see you this morning. I want to hear all about what the summit is about, but also want to talk about some of these new features that you've implemented in the product for advanced traders. It feels like a major shift from where you started and what you were doing. What's the impetus for this?
Well, first of all, the Hood Summit, it's the biggest event we've ever held for active traders. It's here in Miami. and we had 800 of our best customers joining us for the event. We announced some products. We had over 1.7 million people joining on live stream as well. And really, it's just to mark 2 years of progress from us becoming a great app for beginning investors all the way to an advanced platform that serves the needs of sophisticated active traders as well.
And so that's what I was going to ask in terms of just how you're thinking about the market for your product today versus the way I think maybe people thought about the product before.
Yeah, there's 3 things that we're focused on. The first thing is being the market leader in active trading, growing market share. We've done very well on mobile historically among younger people and folks that primarily trade and invest on mobile. But about half of the market is on desktop web, where you have more real estate on the screen. You can do more sophisticated things like have charts and data and the trading in the same interface. And so we weren't really a player in that space. But last night we announced a new platform, which we're calling Robinhood Legend, which is the first platform on desktop that we built specifically for the needs of active traders. And the feedback was really positive. I mean, really, there hasn't been a great trading platform built with modern technology and with charts integrated until we announced Robinhood Legend. So we had 1,000 people sign up and get access to the product in the first 40 seconds after we opened up signups, which I thought was pretty amazing.
I want to ask you about 2 other trends that are taking place among retail investors and whether it's the markets you want to play in. One is we keep talking about the election, as you might imagine. There are folks who now want to bet on the election. You can technically actually do it right now, even in the U.S. Before you couldn't do it. Do you think that's a good development, a bad development? How do you think about the betting markets for political purposes?
Look, I think I'm very pro-markets, pro-free market, and I think that there's legitimate geopolitical risk to hedge, and investors should have access to all the tools at their disposal to hedge their risk appropriately. So yeah, very much in favor of more access to markets and more clear information. I think that the great thing about these markets is people have money on the line as well. So you can kind of trust that they care much more about the results, and those results should be much more reliable in a sense than just simple polling.
So I don't know if you saw, but Stan Druckenmiller yesterday made a comment about another trade that he thinks may be indicative of where this presidential campaign could go, which is the crypto trade, the trade around Bitcoin. I'm curious about how you see crypto moving. Obviously, Bitcoin has moved higher, and whether you think that's a sign of former President Trump gaining a lead in this election, because there's a view that he may be more pro-crypto. At the same time, I think there's a sense that Vice President Harris may be more open to crypto than she used to be. I don't know if you see a massive distinction between the two.
Both candidates seem like they're in favor of the U.S. being a leader in the space, which I think is a welcome departure from the status quo. So it could have an effect. You know, the markets could be reacting to the political sphere, but also we're seeing broad-based optimism right now across multiple asset classes. I don't think it's just crypto. And you know, markets shift up and down. The scenario can change very, very quickly. But right now, when we talk to our traders, many of whom are at this event, they're expressing a lot of optimism. You know, they believe the future is going to be better than the past. America is kind of at the intersection of all of these new trends and innovation. If you're looking at electric vehicles, artificial intelligence, there's a lot of potential there. And they
Right.
see America and the U.S. stock market as the best way to kind of capitalize on that.
I don't know if you saw the story or if you can add any intelligence to this. Politico reported that your chief legal officer, Dan Gallagher, has been floated as a possible pick for SEC chair if former President Trump were to become the president?
Yeah, I mean, obviously, Dan has been a great team member. He's been continues to be amazing to work with, has been responsible in large part for us becoming such a great regulated player and up-leveling there. So, of course, we'd love for him to continue doing that. So I have mixed feelings myself about these reports and rumors. But also, I appreciate that, we need people that have extreme regulatory knowledge, but also care about innovation and America being a leader in financial services and cryptocurrency and all of these related enterprises.
Yeah, that was a horrible interview. And that's not because of Vlad. That's because every freaking question was political. Dude, I can't wait until the election is over. Do any of you guys feel this? I cannot wait until this election is over and it's just done. Because, what was Vlad supposed to say? Yeah, Dan was texting me last night about how he's going to go work for Trump. What was he supposed to say? He can't say anything about that stuff, right? He can't make breaking news that he knows that Dan is going to leave. By the way, I saw a Fox Business News interview a couple of days ago. Someone who is very close friends with Dan Gallagher, who's Robinhood's legal officer, went on Fox Business and said, Dan isn't leaving. And the reason he said that is because that job would pay $300,000 a year. Dan's set up to make close to $10-20 million if Robinhood stock keeps going up. So I don't know. I don't know how much Dan cares about being the next SEC chair and replacing Gensler's legacy versus making a lot of money. So, we'll see kind of how that plays out. But yeah, there's so many questions you could have asked about how you think margin balances would go up, transaction revenues would go up, trading volumes would go up. You could have asked, hey, do you think people are actually going to leave TradingView? Hey, Vlad, did you announce it? Vlad, can you tell us any features that are really different from TradingView that's been around for 20 years? What is so unique about your new? None of that. It was, hey, do you think Trump's going to win because crypto is that was a bad interview. That was a bad one. But overall, I do think Vlad, made the points he needed to make about the broader growth story of Robinhood being intact. And as long as that continues, then we should see some momentum. Robinhood right here, 26.53, down about 1.49%. Palantir, 42.46. We are still holding $40, folks. We're not going up $1 a day like we were for the past 2 weeks, which was a pretty fun 2 weeks. But holding 40 is incredible. Again, I cannot underscore how important it is that we are trading at 95 billion, 40 times price to sales. Everyone thinks Palantir is a bubble, and Palantir is just chilling at $40. Now, Tesla did chill at $1 trillion market cap for a while before it came down. So I think we have to get through a couple of months of being at these levels to really say it's normalized and it's not just buying to buy. But if we stay through for the next couple of months at these levels, maybe there is a world in which 37, 38 is kind of the pullback versus 30, 32, 31, or 25, 26. And I'm of the belief that if we get a pullback to 35, that's healthy. It's normal. 25% drawdown is not a bad thing to see, but it's also not something that needs to happen if the market continues to buy up this stock as they see continued growth. Wow, NVIDIA 140. Holy crap. Someone just bought $300 million of NVIDIA for that to happen. Let me check the resistance into 141. As you can see, it's even above 140.5 right now. It's trying to get into that 141 level. And let's see where the resistance is for that. That is some bullish action for NVIDIA. At 141, you've got 300,000 shares. 300,000 shares at 141. So not as much as 1.6 million at 140, but still a decent number of shares that are going to have to be bought up. You check resistance by looking at the order flow, the order book flow. I use Robinhood. Again, it's not a perfect order book flow, but when you look at it, you can kind of see how many shares are being held up for sale at a certain price. So I'm not using the Robinhood platform yet, guys, because frankly, I don't really know how to use it yet. It's going to take me, I think, a week or two to understand this platform. I do have access to it. I was playing with it last night. If you guys want to see me play with it for an hour, go to the live stream from last night, and you'll see me and Arnie kind of go through it. But I'm still learning it, trying to understand it. The one thing I don't like about it is it doesn't have the Webull setup in regards to, you're looking at NVIDIA's chart right here. On the left-hand side of the screen, you're looking at all the tickers stacked up on top of each other vertically. And then you're looking at a box on the right-hand screen with all the stats about NVIDIA. Robinhood has all the stats about NVIDIA on the right-hand side of the screen with the tickers horizontally, not vertically. And it makes it kind of hard to access the information as like a streamer. And so that's one thing I would like them to change if they can. I'm going to try to submit whatever feedback I can because I would love to use the platform every day. It looks very sleek and very beautiful. The charts are far better. Even the zooming in and out of the charts are just incredible when it comes to playing around with it. But it's hard on the eyes. You guys, even from your phone, would not be able to see the tickers because they're pretty small on the left-hand side of the screen. So these are little quirks and things that I think eventually they'll change. And as they continue to change that stuff, we'll probably integrate the platform onto our stream as well. Okay, Tesla. Let's talk about Tesla. So we got a video coming from Optimus yesterday. I want to talk about the Tesla event because I have some thoughts on that Robotaxi event. But here's the Optimus video they put out last night, or I think this morning, for Tesla. I mean, it's pretty cool. It's not crazy. It's not crazy at all. So here's my thing about this, right? I'll play it again and I'll turn the audio off on this. Couple issues with Tesla. First of all, the event was absolutely sell the news. And I think a lot of the Tesla bulls are becoming a little delusional to not realize why it was a sell the news. If you're a Tesla bull in the chat and you don't understand why that event was sell the news, you are not being objective. I'll just be very honest. You're not being objective. And this is how you become objective. Robinhood's down 2% right now. Why is it down 2% coming from a Robinhood bull? Well, they didn't really show the killer feature that instantly people with seven-figure trading accounts are going to leave their TradingView and Schwab brokerages for Robinhood. Boom. There you go. That's how you be objective as someone who's bullish on a stock. I can admit Robinhood did not give like absolutely insane, oh my God, I have to switch right now outside of the 2% match, which, you know, that's subjective if you care about the 2% match, to switch onto their new platform. It's just like they just didn't give that killer feature. And I still think it was a good event, but if they had that killer feature, I don't know if the stock would be down 2% right now, because you would have the market pricing in pretty much everyone switching onto Robinhood because there's just so much momentum for people that have to use that platform. They didn't show that the single feature. That's okay. I still think Robinhood will be fine. For the Tesla bulls that don't understand why Tesla fell 10% off that event, it's pretty freaking obvious. There was no real timeline on the Robotaxi rollout. It's just that simple. It like what I got from Elon was 2026 Cybercab production. Okay, so first of all, do we even trust that it's going to be 2026 or is it going to be 2027? Second of all, is that going to be a full Robotaxi that officially or a Cybercab that can pick you up and drop you back and forth places in 2028, 2027, at the end of 2026? Like, we don't have any of those details. And it's not just me. Every single analyst, including Adam Jonas, who's one of the biggest bulls on Wall Street, even he came out and said the title of his piece was, wait, that's it? He was like it was a 20-minute event that started an hour late. And you got a 20-minute, this RoboVan thing was stupid, in my opinion. I'm sorry. It looks really cool, but that to me is like another thing that's 5 years away. That's like Cybertruck in 2019, that it looks really awesome, but it's not coming for a long time. I'm sorry. It's just true. It looks really cool, but it's a long time away. So that's not moving the stock. Optimus, apparently the reports are confirmed that Optimus was being controlled from some guys in a back room that were talking to people and doing the hand movements that were wearing VR headsets to kind of interact with people. I'm sure some parts of it were teleoperated or were operated autonomously, but other parts, the far majority, were teleoperated, which means Optimus wasn't literally doing it. Even Gene Munster came out and said he was so impressed by Optimus, but he had to revise his report because apparently it was not being controlled by an autonomous neural net itself. And then you got the Cybercab, which we don't have any details on. And then you don't have any details on this $25,000 car. Now, that $25,000 car, I think it's actually okay that they didn't announce it, because if you announce the $25,000 coming out in 6 months, why would people buy a Tesla Model 3 right now, right? So I'll give Tesla credit there. It's like they didn't have to announce some crazy new $25,000, $30,000 car to get the stock to move higher, because that would disincentivize people from buying the Model 3, Model Y right now. That is super fair. But outside of the elementary details we got of maybe Cybercab going into production in 2026, the Robovan, we don't know when the hell that's happening, Optimus, good videos that we saw today, but again, no real idea on when that's going into production and when that's being exported to factories so that people can start using it and Tesla can start getting a ton of LOIs from their Optimus orders. Until we get all those details, I just don't think the stock is going to move higher. Now, having said all of that bearish stuff, I still think that what they showed off is the future. And this is why I want to build a significant Tesla position going into 2025, even at this range, 220 and below. If it can get below 200, I think selling the 185 or 195 put is not a bad deal right now in terms of the premium they're getting. But I would wait till after earnings, because earnings is going to show EPS growth down 48%. And when that happens, you might just get like a pretty disgusting reaction. And so I think you can wait to potentially sell some puts, but I do think that's the future. I think the Cybercab is the future. I think Optimus is the future. I think FSD being available in Texas and California in 2025, hopefully that starts to scale more broadly to different states in 2026. I think that is the future, and I think Tesla has a lot of momentum. It's just in the short term, there is no real good reason to get excited to buy the stock right now, in my opinion. Because the entire narrative to go to $300, which was like that magical number, was that Elon was going to announce something so special that narrative alone would take the stock into a different stratosphere. And that just wasn't the case. And that doesn't mean you have to be super bearish on it. That just means that, hey, you're acknowledging objectively that the stock's not going to go up another 30, 40% from here simply because of a 20-minute robotaxi event that was light on details. But if you're in this for the next 10 years, I don't see how anyone who's bullish on AI can't have some Tesla in their portfolio because it's the best real-world application of AI. And it seems like at the event, they continue to prove that would happen. Amit, did we discuss Uber buying Expedia? Okay, so let's transition to that. So Uber yesterday had some rumors that they were buying Expedia. Uber down about 3% right now. Those rumors have not been confirmed or denied. Expedia is a travel booking app, which you would argue can make Uber kind of a super app if you could book your flights and hotels through Uber, competing a little bit with Airbnb there to an extent. Here's what Dan Ives had to say about Uber and Expedia.
Expedia and Uber this morning. A Financial Times report said that Uber has explored a possible bid for the travel booking website. That report says that Uber approached advisors in recent months after the idea of acquiring Expedia was broached by a third party. Obviously, very interesting deal because of Dara Khosrowshahi, who's the head at Uber, who used to be the head at Expedia and still is a non-executive member of the board there.
I forgot about that. Dara used to be the head of Expedia. Now he's the CEO of Uber. I totally forgot about that. That means there might be some juice to the story.
But joining us right now to talk about it is Dan Ives. He's managing director at Wedbush Securities. And Dan, again, very interesting deal. What do you think of it?
I mean, I think this would be a major strategic home run for Uber. I mean, right now, this is them going on the offensive. They're trying to expand their tentacles. You look at Expedia, that would fit in extremely well and really give them, I think, massive monetization opportunities. This is one that makes a lot of sense, I think, every which way.
The market may not agree with you initially, knee-jerk reaction. Uber shares down by about 3.3%. We don't know anything about this. This is very early days. Nobody knows how this deal would work, if they'd actually go ahead with it, what they would pay, and maybe that's the biggest question. Makes sense at what price, you think?
Look, I mean, I think for Uber, I mean, this can make sense even 15, 20, 25% higher at Expedia, because I think you look at some of the revenue synergies that they could get from this. I mean, this is something that could really, I think, change the revenue trajectory of Uber because of the cross sell. I think clearly what Dara is going after, they're now on offensive mode. You go back a few years ago, cost cutting, strategically defensive mode. I mean, they have a massive mojo and they're just gaining more and more share. You look at what they could acquire. I think they're going to be on the hunt for M&A. Expedia, I think front and center, that would fit like a glove into the strategy.
Dan, explain to me why you think it would fit like a glove. I understand the concept of super app. I made the argument for one earlier, but I could also make the argument that these things work just as well independently of each other.
Yeah, I mean, Andrew, I view this is one step toward a super app, and no different than what we see in Asia, throughout, especially in China. The super app concept is where Uber's going. And then even to take it broader, when you think about more and more competition down the road, whether it's from Tesla and from others, Uber right now is trying to just build more and more of a moat. And this is just going further and further toward a super app concept. And I think that's something where maybe knee-jerk the stock would be down, but I think investors will like the strategy. Right now, Uber has massive momentum. This is the time to go aggressive on M&A, not sit in the right lane going 40 miles an hour.
Well, I guess the question I'm asking you, is this a financial deal insofar as you think you can buy Expedia at a good price and improve what it's doing and hopefully generate additional sales because you're going to have more people that you're able to leverage off the Uber app to other places into the Expedia universe? Would that be the sort of basic argument, or do you actually think there's genuine synergies between these two businesses that are ongoing, which is to say what percentage, therefore, of Uber users do you think are traveling meaningfully and would be using this app to book to make all these bookings?
Well, I think there could be 10 to 15% revenue synergy just in terms of how many Uber customers are ultimately using Expedia apps. I think when you think about it, this is really Uber trying more and more to be a one-stop shop when it comes to travel. And maybe a few years ago, they were a little hesitant. Now is the time they're going on the offensive. And when you look at Expedia, there's no other asset, and especially when it would be like bringing the band back together, just giving Darren, no one knows Expedia better than him. And this is something on every metric that I think would make a ton of sense from an M&A perspective, and clearly be their biggest M&A deal ever.
If you didn't buy this, what would you buy?
I think if you don't buy this, they're going to have to ultimately go more and more down the autonomous route. I mean, obviously, partner.
And obviously, Uber doing autonomy is not easy because you need a lot of data and technology to do that. And Uber doesn't really have that data and technology. However, Uber stock was up 10% after this this Tesla event when Tesla was down 10%, because it seems more and more likely that Uber's not dying. And I know a lot of the Tesla bulls think Uber's dead. Dude, it seems like it's going to be a while before FSD not only rolls out, it's fully unsupervised. It is meaningfully scaling at 100,000 rides a week like Waymo's doing right now. The Cybercab going into production is going to take time. Then rolling out is going to take time. And then all the regulatory approvals is going to take time as well. So in that midst of, I imagine, at least 5 years, I mean, if you want to be really optimistic and say 3 years, which I think is a bit too optimistic, even 5 years is optimistic, Uber is not going anywhere. Uber's not going anywhere. And even if Uber and Tesla partner, that's great. That's amazing. But that means Uber's not dead, right? That means Uber's still alive if it's partnering with Tesla. So I think Jason Calacanis, we went through his take last week. He was an early investor in Uber, one of Elon's best friends. And he said he thinks that there is a world in which Tesla is a multiplier for Uber and Uber is a multiplier for Tesla. There's a kind of synergistic energy there that I think is also very possible. But I don't think Uber has to be dead. So if you have Uber stock, maybe that's not the worst thing in the world. I don't know if Uber's a buy right now. I don't really, know their financials as deep to kind of say if Uber's a buy here at $80. But it definitely doesn't feel like Uber is going down the drain. I think a lot of the people saying Uber was going down the drain are similar to people saying CrowdStrike was going down the drain. Like it's just too important of a company, 150 million active users. Hard to imagine that it completely disappears disappears overnight. So that's what we got on Uber. Final thoughts on Tesla. Super bullish on Tesla long term. I will be establishing a long term position in 2025 and trying to just do my DCA every single month, whether that's 10 shares, 20 shares, whatever I can afford to allocate to Tesla, and hopefully build out over the next decade 1,000 share position in Tesla. And we'll see, maybe more than that, maybe a little bit less than that, but that is kind of the goal for what it looks like for Tesla. And kind of ride with those shares over the long term, because I think it's the best real world application of AI. I do think I'll have good opportunities. I don't think I have to buy it at 250, 260. And, I feel for the people that bought it at 250, 260, thinking it was going to 300. I told you guys I have a friend who bought a lot of shares at 240, and he's down a lot on those shares right now. So really, it's going to be a question of the numbers matching the momentum. And until that happens, in terms of the numbers matching the story, you're probably going to see Tesla down in this range. Could we have a surprise run to 300 by the end of the year? Maybe, but I don't know what the catalyst is for that. Definitely not earnings. It's got to be something else. And maybe Tesla has something up their sleeve. But until then, I think this 220 range is not a horrible range for Tesla to kind of be sitting out right now. Okay, cool. So that's what we got on Tesla. Let's talk about China. China. So, well, I mean, what do you guys think? Is China back or is China dead? Because the problem with China over the past couple of weeks has been that the amount of stimulus the street wanted, Alibaba today is down. Wow, Alibaba's below 100. Holy crap. You would think Alibaba would hold 300. Nope. Right here, down 2.5. The lack of stimulus by China has been upsetting to the markets. By the way, NVIDIA going down from 140 to 137. So you had some sellers right there at 140.89, and that's taking NVIDIA down. There's not enough stimulus for China. There's just not enough stimulus. Baba's down. Let's go to the Chinese companies. JD is down. NIO is down. All of those companies are getting hit because the market had expectations of massive COVID-style stimulus, and we got none of that. Look at that. JD down 4%, NIO down 5%, Baba down 2%, Baidu down 3%, Li Auto down 4%, FXI down another 3%. All these companies are down almost 20% for the past week, erasing a decent amount of gains that they had 2 weeks ago when the whole China stimulus thing happened. And then on top of that, you had this thing that caused another bit of a catalyst 2 days ago on Tuesday to start seeing some downside momentum, which is a report from Bloomberg. Wealthy individuals are being summoned by tax authorities to assess payments, part of President Xi's common prosperity push. With fiscal revenue down 2.6% this year and land sales dropping 25%, the government is seeking new ways to boost revenue amid a slowing economy. Offshore assets, especially those for holding over 10 million, are in focus. Meaning, if you are a foreign investor living in China and you've made a crap ton of money in New Zealand by selling some properties, for example, and you've got that money sitting in a Chinese bank account and you have not paid taxes on those foreign investments, which is not really illegal because for the past couple of years, China has really ignored those taxes. So it's been okay to not pay those taxes. Now the Chinese government is calling you up and they're saying, hey, buddy, you got to pay us some of those taxes. Why is this stupid? First of all, if you're trying to stimulate an economy, the last thing you want to do is disincentivize people by raising taxes. I mean, that makes no sense, right? Like if I'm a Chinese investor for the first time and I've been investing in NVIDIA and Apple and Robinhood and Palantir and real estate in New York, and I have a ton of money and the place where I live in is finally starting to stimulate, and I see Alibaba's trading at an 8 times PE, NIO at $5, they're selling a decent amount of cars at $5. It's worth at least a little bit of my portfolio. You should be happy to allocate more capital. Why is the government, coming up to these people that are ready to put in money? And we know this from the brokerage, a number of openings that have happened over the past couple of weeks, the highest number in 10 years, now saying, hey, you got to pay some taxes. Like, it's one of those things that is incongruent with the broader stimulatory effect of China. Even during COVID, I think we delayed taxes for over a year because COVID happened in March. There was no way people were going to make the April 15th deadline. So we delayed taxes for a long time. Why? Because you don't want people that just lost their jobs and barely have any money, they're waiting for their stimulus checks, to somehow figure out how to get money to pay taxes. The number one thing those people are going to do is they're going to sell assets. Now, you may be saying, oh, well, this is a tax only on wealthy individuals, and those wealthy individuals have all the money. So why should they worry? Why should the Chinese government be afraid of them selling off assets to be able to pay the taxes? I think it's because, number one, if you impose a 20% tax that hasn't been imposed for the past 7 years, and now because I didn't have to pay this tax, I spent all that money, aka I maybe bought Alibaba because I saw the government was stimulating at 110, 115, because the fair value on this thing is probably closer to 250. And now Alibaba goes to 99 off this new thing. I have to sell at a loss to get the capital, to just have the liquidity to be able to pay these taxes. And I think a lot of foreign investors don't sit in cash. A lot of big time investors don't sit in cash because cash is trash. A lot of them want to allocate capital. The capital is somewhere. So they're going to have to sell off some assets. And if any of those assets have to be sold off in the Chinese economy, which I would imagine a ton of them started pouring hundreds of billions of dollars in over the past couple of weeks based on China stimulating. But then China does this kind of screwy, wonky policy where they're not going to stimulate as much as they said they were going to stimulate, which was the last Friday PBOC meeting, which got the market already upset. And then they're going to put this random tax that came out of nowhere that hasn't been in jurisdiction over the past 7 years. You just have a recipe for a really weird regulatory environment. And it begs the question, who the hell is buying this dip on China? So that's my question to the chat. For those that were in the China trade, who is doubling down on this trade? Because I don't think it's the worst thing in the world to double down on it. I still think China's obviously undervalued. Alibaba at 99 is the most undervalued stock in the world. The problem is if Alibaba only went up, if we look at the monthly right here, let's look at the 3-month chart. So Alibaba was at 73. It only went from 73 on August 5th to 121, not because of any fundamental earnings growth, but because of stimulus. And now it's back down from 121 to 99. If the stimulus is not going to be as expansive as what people thought it was going to be, aka the CCP rug pulls again, which is, kind of historically what has happened, then what is the thesis on buying this dip? Unless people think the stimulus is just getting started and this is a little blip in the road, and in the next 2 years, we're going to have so much stimulus that it's going to be absolutely crazy. China's import sales were down year over year last week. Their export sales were down year over year. Their CPI came in worse than expected to the downside, meaning there's a risk of deflation in China. This is the same shit that's going on in Japan right now. So, realistically, they need a lot of growth to maintain momentum and to get people to start investing and feeling excited about the economy again. And I don't know where that's going to come from outside of governmental stimulus, but so far we're not seeing that stimulus right now. So that is the take I have on China, and that's kind of the fear that I have on China right now. Max says, why would you want to invest your hard-earned capital into companies that can be owned at any given time by China? Best invest in U.S. companies. I mean, look, that's been my perspective since this China trade has happened. I mean, I know NVIDIA is expensive right here, but NVIDIA was at, I think, 120 when the China trade started happening. I would, much rather buy NVIDIA at 120, even though it's obviously more expensive than Alibaba any day of the week than buying Alibaba at $100. I would much rather buy Palantir, even though it's probably pretty expensive at 42, than buy the Chinese companies. And so either I'm wrong and the stimulus is really coming and it's just delayed, which is very possible, or the stimulus is not going to be as expansive. Look at TSM up 11% right now. And if it's not, then I don't know what the Chinese thesis is. I really don't. And I'm searching for it because David Tepper, who a lot of people respect, said buy everything. We saw Stanley Druckenmiller admit today he was wrong. It's not like these guys can't be wrong once in a while. If he was wrong on that, then this is not going to be the best thing for the broader Chinese economy. Thank you for the $20 super chat. There we go. Makes money, buy put again at 850 and sell for profit at 1030. Your theory is, well, we're getting the 1030 slam. Yeah. If you bought NVIDIA right before 1030 and then you sold it, or you bought some puts, you can profit right at 1030 and get out of those puts and then buy equities. That seems to happen every day at 1030, and it is no different here today. Robinhood right here at 26.34, down about 2.4%. Affirm down 5.8%. I don't think Affirm had earnings today. They must have had something that happened to be down 5%. But Affirm was up 40% last month, so you can imagine people are taking some profits. Apple expands payments options with iOS 18. Affirm is going to be their new payments partner in iOS 18, launching today. That seems to be relatively bullish, so not sure why Affirm's down 5%, but we'll try to see if we can get some of those details. Okay, there we go. That's what we got in the context of China. American Express hit all-time highs today. Earnings tomorrow. Where's AXP? Guys, again, earnings have been just exceptional across the board. AXP, yeah, look at that, 284. Wow. 284. What a chart. Look at that over the past 5 years. 62 back in COVID, now 284. The earnings we had today, TSM was the big one. Let me see the other companies we had. Yesterday, we had really good earnings beats across the board. We do have Netflix. I won't be doing the market close today or the market close tomorrow. I will be doing the market open tomorrow, so no market close, but Netflix will be a big earnings to look at today after the bell. We had Truist that had good earnings today. What else did we have? Morgan Stanley had great earnings per share, 188 versus 159 on EPS, 15.3 billion versus 14.29 billion. Not bad at all. And then we had United with a massive earnings beat, 333 versus 317 EPS, 14.8 billion versus 14.7 billion in revenue. Again, United's not going up 10% in a day for the first time in like 10 years because of Q3 earnings. It's because of their guidance. And that guidance seems to be what the street likes to see, which is getting United to get some really strong momentum. Look at United. It was at 91 in 2019, fell all the way to 17 during COVID, now back to 73. Stock's basically done a 3x since then, a little bit more than a 3x, which is just incredible. And it's an airline company. It's not a tech company. It's not, the next big semiconductor play. It's just an airline company because the macro is starting to recover, and that's obviously very good for consumer demand. Retail sales data. So here is some better pictures on what we're looking at retail sales. We did beat expectations. Clothing and accessories was up 1.5%. Health up 1.1%. Food services up 1%. E-commerce up 0.4%. Sporting goods up 0.3%. Furniture is down 1.4%. That makes sense because people aren't buying homes as much. Gasoline is down 1.6%. Electronic and appliances down 3.3%. So overall, people are still spending. America doesn't just run on Dunkin'. America runs on credit. And if America continues to spend at the level that we're spending at, that is strong for earnings growth. And that's really all we need for the market to continue to say, hey, this is not the worst thing in the world that the S&P is trading at all-time highs right before the election. If that earnings growth is going to continue because people have jobs and those jobs give them the money to be able to spend. So I guess what I'm trying to say is I feel like it's bullish, dude. I just feel like what we're seeing with earnings is not bearish. Now, the technicals from Fundstrat, I said I would talk about Fundstrat. Here's what Fundstrat said today. They think the Qs can fall by 8% going into November. And I actually don't blame some of their arguments right here. So what they're saying right here is a lot of technical arguments. Mark Newton, the head of technical strategy at Fundstrat, is saying that, look, the technicals are showing us that we're seeing expansion of the NASDAQ, and there seems to be a little bit more negative momentum divergence happening, which could lead to a broader 5 to 7% pullback, which would put the Qs probably at around 460, 470. Another reason they're saying you could have a sell-off is because right now, which is mid-October until the election, so the last 2 weeks until the election, is the most volatile time for the stock market. Now, I know I've been saying September is the most volatile time, and the first 2 weeks of October are the most volatile time. But it also seems, based on the historical data, the last 2 weeks of October going into the election are the most volatile time. So far, we haven't seen that volatility to the downside over the past 2 months. It's only been to the upside. And either the technicals officially, give us a bit of a pullback that I think the market has been thinking could happen, or this is a bull market that does not seem to be slowing down. And the technicals themselves don't have to necessarily play into the way that some strategists think it could happen. Now, speaking about the election, another reason I think we're getting some momentum is if the market thinks Trump is bullish for the election, then Trump winning right now is why the market might be going up. So Kamala Harris has tanked in the poly market polls. You might not love these polls. That's fine. You might trust other polls. That's totally okay. I kind of like the betting markets because there's over $2 billion of volume across these candidates. And when you have real money attached to betting odds in regards to a political candidate, obviously no one wants to lose their money. And so you have a little bit more of a, I think, better read than just asking people on the street who are they going to vote for versus seeing where capital is being allocated based on the perception of who people think is going to win, which will allow them to get an ROI on the money they put into the betting markets. So that's my logic for why I like the betting markets as somewhat of a read on the election. Trump's winning by almost 20% right now. And the catalyst seems to be the 60 Minutes interview that did not go that well for Kamala. Some of you guys may think it went well. Some people may think it didn't go well. I think there are some arguments to say, hey, she just wasn't the best on some of those answers. If that's the case and the market's pricing in a Trump victory, that's good for crypto, obviously, and that's good for the broader market. Now, I'm torn on this because I don't know if tariffs are actually great for the market. I don't think anyone really knows if tariffs are great for the market. We've been theorizing about this for the past 4 months now. But if the market doesn't even think Trump's going to be able to pass all these tariffs and that the House and the Senate are going to be divided and that you're not going to get some crazy corporate income tax or handing out $25,000 to new home buyers and printing more money to potentially re-stimulate inflation, then maybe that in and of itself is enough for the market to say, hey, Trump would be better than Harris. That is objectively kind of, I think, how the market's thinking about it. And if Trump's winning, the market might be front running that by buying equities before Trump gets elected, if he gets elected. So that's what I think is going on right now. I could be wrong, but that's another kind of short-term catalyst along with retail sales data, jobs growth, and then earnings growth. Robinhood right here, 26.33, Palantir 41.90. That's potentially leading to S&P getting here to all-time highs right before the election. I mean, who would have thought, dude, S&P would almost be touching 590, almost 6,000 before the election? I don't think anyone really thought that would happen. I definitely didn't think that would happen. And that's happening. And that's happening, by the way, while Tesla's down. Like Tesla, which is a decent part of the S&P 500, I think it's like number 12 on the weighting. That's down 10, 15% over the past couple of weeks. And the market's still going up. A lot of that money seems to be rotating into NVIDIA. But you don't have all the big names surging. Like Microsoft's at 419. Microsoft's been at 419 for a while now. Microsoft was at 460 at the top in July, had come down all the way to 385, 388, was at 467 in July, now back at 418. It's not like Microsoft's going to the moon here. You're starting to see the broader market really broaden. IWM, look at that. It's down 0.5% today, but it was at 227, almost at 52-week highs yesterday. You're seeing the Russell start to really show some strength. And that's maybe because the market's diversifying, and that diversification is good for overall equities and momentum to keep the market going higher. TSM is still ripping. Where's TSM right now? TSM, yeah, wow, 12.75% on the day for TSM. I mean, look, maybe the street's getting a little excited here, but if they're willing to give TSM $65 billion of market cap on this earnings, it means that they think the growth is going to keep happening. And you got NVIDIA right here at 3% following from TSM. Is the election going to be a sell the news event? I have no idea. I'm going to be live all night for the election. I'll be with Chris. I'll try to get some other people to join, and we'll be covering the whole thing for like probably 10, 15 hours in a row because I'm going to be very curious to see who wins. Obviously, it'll have a big impact on my portfolio and everyone else's portfolio. I don't think it's going to be sell the news. I think it's going to be I think the market is priced in a lot when it comes to the election. I think if Kamala wins, it's not the worst thing in the world because the market will just like move on because I don't think she's going to get a clean Democratic sweep. And if she doesn't, then a lot of her policies that are a bit, not the best for the market probably are not going to pass. We've seen Kamala put out some policies over the past couple of days around cryptocurrency and AI that has been worded in a very interesting way, to say the least. But I don't know, dude. I don't think we have to get a 10% down day if Kamala wins. I don't think we have to get a 10% up day if Trump wins. I think we can be relatively stable. And if we're relatively stable, that's all we need, because once we get into the rest of the year, after the election uncertainty is done and we have the rest of earnings to go forward, then we should see continued momentum, I think. Or we could get a 20% drawdown, or I don't know how it's going to play out. It could be super volatile. It could be super basic, but I think the market is so far pricing in a Trump victory just based on these polls. And it's either going to be a surprise or not a surprise to the market based on what ends up happening when we have the election. Palantir does have their earnings right before the election, which is going to be interesting. I think the election is insignificant to Palantir. I think the only thing that matters for Palantir is their earnings growth. And if they can do that, I think it'll be good. But if you get a JD Vance who gets elected, who's very good friends with the Peter Thiels of the world, that's an argument that's potentially beneficial for Palantir. And if you get a Kamala victory where corporate taxes have to go up, maybe that's bad for Palantir. So I don't know. But if it's bad for Palantir or if it's good for Palantir, I think it'll be bad or good for the broader market. So I don't think their earnings right before the election is going to have that much of an impact. I think revenue growth is the only thing that matters. If we don't see 30%, I think Palantir is going to tank. If we see 30% or higher, I think we can hold this multiple. And if we somehow see 35 to 40%, I think we're going to $50. Even if $50 probably would not be justified when we get to that level. But the street's going to buy it up if we show that reaccelerating growth. So it's really just going to be a question of what that growth comes into. When are you going to be back to home base, Amit? I will be back on Monday. I don't think I'll be able to do the market open on Monday because I get back to the airport at 6:30. So might not be able to do the market open actually at 6:30 or actually at 8:45 because it might take a couple hours to get home from the airport. But Tuesday next week officially should be back for the market open, and that'll get right into earnings season. And we'll keep going from there. Now, Lee has a good question. What if we can't announce a winner for a couple of days? I don't know what the hell is going to happen. Forget the market. I think we might have some broader panic in the streets of the United States of America if each side doesn't know who won. And that's kind of scary. I'm not going to lie. That is also another bear case for the market if we don't have a winner or if someone doesn't peacefully accept losing, whether that's Trump or Kamala. I think that could happen on both sides, to be honest. So I don't know. That's one of those things where we're going to have to see what happens. I really hope it's a landslide for one or the other so that there is like no way someone can argue that one state is going to determine what's going to happen for the election. And as long as it's a landslide with a, not a clean sweep across the board for whatever side, I think the market will move on from it. So that's what we're going to have to see. And that'll determine kind of what happens to the broader market once we get those results. But I'll be up all night, dude. I'll be up all night. I'm going to try to get Chris. Maybe Steve will join. Maybe Adam Bergman. Who else can I get? I'm gonna try to see Carlos. Maybe I get him on the stream. I want to stay up like all night to see who wins because that's a big event, dude. Like that's one we got to know who the hell is the next president, and hopefully we get an answer by like 3 a.m., 4 a.m. at night, and we don't have to wait 2 days. And if we do, then we should know how the market should react to that at the end of the day as well. Elon is trying to get Trump to win. That is 100%. Dude, Elon is pulling out every single stop to get Trump to win. It is no confusion in the air in terms of how Elon thinks about this. Oh, we got Kramer talking about Palantir. Hold on, let me pull this up. So Elon's trying his best. We'll see if he gets Trump in office. There will be some bullish sentiment for Tesla if that's the case, just based on the deals Elon probably has with the administration. Also, he might become that guy who is the guy in charge of cleaning up the costs of the government, that new governmental commission they're setting up. So Elon wants Trump to win, but we're going to have to see if Trump ends up actually getting there to get Elon to have those things that he's looking for. All right, here's Kramer on Palantir. This came out just now.
It's time for Jim and Stop Trading.
Well, the great retail stock of this generation is the new people's Palantir, PLTR. Mizuho comes out today. They have a sell on it, underperformed, and but they raised their price target. And this is from my top 10 list I do every morning, free to anyone who signs up for its number 5. And I love this. In their little mention of Palantir, they say, we remain concerned by the lack of visibility into its business, and we find the current valuation indefensible. We raised our price target to 30 from 24. So you had this problem where you had someone who doesn't like a stock and it just won't stop. Retail loves Palantir. Obviously, they have software. They have Alex Karp, who's one of those CEOs that we dream of, right? He kind of just tells it like it is, curse words and all.
Yeah, I saw Oppie up the target on ServiceNow as well.
Yes, absolutely. We have a lot of the software companies that are doing well. I continue to think that Agentforce for Salesforce, Mark Benioff, is going to be the biggest product they've ever had. Look for a launch later this year. There's just things happening in AI that, again, Taiwan Semi has said is real, and they are. And people who want to chide AI
Oops, sorry. I was muted. So we went from Kramer saying 2 weeks ago that Palantir is a cult stock and it's not even a real business to now saying it's in his top 10 list or top 5 list of AI names to buy. A little weird, but I guess sentiment changes as the price goes higher, and That's what we're getting from Kramer. We got Vlad, who just posted a video real quick. Let's see what he's saying right here. They just posted this 2 minutes ago.
If you can make me laugh, I will drop desktop trading and futures at the Hood Summit.
Okay.
If you can make me laugh, I will drop desktop trading and futures at the Hood Summit.
Okay.
I have never seen Vlad do this. I have never seen him laugh like this or smile like this. Talk about stepping out of your comfort zone, dude.
Okay.
He's definitely embracing a new set of ideas for this event. Okay, that was kind of funny. You know, the interesting thing about the Robinhood event itself, if you guys watched it, is the event itself didn't have the best acting, I guess you could argue. In terms of the people on stage, you could tell people are a little awkward, a little nervous, little like hesitant to get up there. And that's okay. They're not full-time presenters, right? But that was there a little bit. I don't think that's bearish or anything, but that was just one of those things that was there. So from a pure presentation perspective, you did have a little of those moments that were just kind of weird, right? That just like didn't make a lot of sense. But outside of that, the actual presentation was strong and not too bad, which was a good thing. Now that video seems like Vlad is embracing new elements of his personality. I've never seen him laugh like that or ever even show that much emotion, but that's what you got going on with Vlad. Okay, anything else? We can get into Q&A now or over how the past couple of weeks have been in India, since I know a lot of you guys have questions. But outside of that, I think that's most of the market news. Robinhood is down 3% on the day. Maybe that laugh took it down 3%. If we see Hood fall into the 25.70 range, I'll probably buy another 50 shares. That's kind of my range. I've been buying a lot this week, so I'm really not that tempted to buy, down 3% on the day. So if we get to 25.70, 25.80, I'll probably buy another 50 shares. If not, then I'm fine with that. But we do have Robinhood down about 3%. Palantir's up a little bit right now. NVIDIA trying to get back to 140. TSM still up almost 13% on the day. Uber down 0.5%, Uber down 3%, Tesla down 0.5%, Alibaba down 2%, Rocket Lab down 4.78%, Bitcoin almost at 67,000, S&P at 583 right now on the day. You're coming at him for showing emotions, dude. Vlad is never the guy to show emotions ever. So I guess for this event they're going all out. Right now at the event they have basically panels at the Miami hotel. And in those panels, I hope these are recorded sessions. We'll get to watch them. They're doing a bunch of like different little keynotes. So the big keynote was yesterday, and now they're having mini keynotes. And so hopefully we'll get some of that content. Crossroads, fan of the channel, he's there. What's his name? Tanner from Future Investing, he's there as well. So hopefully we get some exclusive content from them, and we see kind of how the event's going. But overall, that event will be ending tomorrow afternoon, and we'll probably hopefully get some more updates from them as well. Okay, cool. Let's get into some Q&A to end this out. How was the wedding? The wedding was cool. It was fun. I'm not the closest with the woman who was getting married. Like, she's like my mom's second cousin. So like, it was one of those things where she's family, but I don't know her that well. So the only part of the wedding that was a little weird is I didn't know everyone that was there because it wasn't the closest immediate family, but it was still pretty good. It was like a 3-hour bus ride to get there. And so the bus ride was fun with me and my family kind of just yapping in the bus and talking about life and all that stuff and making jokes. But the wedding itself was cool. Nothing too crazy from there. Weather in India has also been going really well. Weather is like 75 degrees in October. Usually when I come in July, it's like 120 degrees or 115 degrees. So weather has been very nice and has not been too bad. AC has been good. Internet has been fine. Electricity has been fine. Nothing too crazy. I mean, my grandmother's apartment has been pretty good. Like, a lot of India has modernized, even though they've got a long way to go. One thing I will say is I am so freaking bullish on India. I don't want to get into the bull case right now, but the simple stat I'm going to say is GDP growth is 7% per year for the next 10 years. That's not happening anywhere else across the world. And when you have GDP growing that much with the small caps of India that are getting so many inflows because they just have so many more consumers, because there's 1.5 billion people that need goods and services. I don't see how I can't go long on India over the next decade as a part of diversifying emerging markets exposure within my portfolio. Like, I feel like it's just obvious here. So I'm going to bring a lot of DD next week, and we're going to go through it. Unfortunately, we can't buy that many assets in India because we're in the States, and you have to like get an OCI visa just to be able to set up an India account to be able to buy like the actual equities in India. But I think we'll still have some ETFs we can get exposure to as people across the world, and that'll be broadly bullish for that portfolio. Rango says, I invested in NCE, India's NASDAQ, the company, early stage, and they paid a dividend before going public. Wow. Yeah. I mean, there's so many companies that my uncle has been talking about. Chemical companies, manufacturing companies, logistics companies. My uncle actually, Rango, speaking of early stage, there's a company called Swiggy, which is a competitor to Blinkit. Blinkit, think of it as Postmates in the United States, or Uber Eats, but Uber Eats really does like fast food. Postmates and GoPuff, they can do like anything, right? Like if I want a Red Bull from 7-Eleven, the guy can go to 7-Eleven and, come to your house and bring you Red Bull. In India, it's called Blinkit, and it's within 5 minutes you will get your orders. I've done it like 5 times while I've been here. Within 5 minutes, they have so many people because they have so many consumers, because they have so many people, they have so much demand for goods and services that people don't even go grocery shopping anymore. They just Blinkit everything. My uncle invested in a competitor early stage called Swiggy that is going to go public and I think be worth about 11 billion. And my uncle invested at 5 billion. So he's getting a nice double when his shares go public in the next couple months. And there's just this emerging market for demand in regards to every different vertical because there's so many people. So I can imagine that the private stage companies in India are also getting a bid, and that's going to create a lot more momentum for the public markets as well. Yeah, Rango knows Swiggy. Zomato is the public company for comps, correct? Zomato I think is 30 billion right now, which is huge for India. Swiggy I think is going to be worth 10 to 11 billion. So those two companies, kind of like the Uber Eats and DoorDash, but like of everything, not just of like fast food. That's going to be very important. What's the tax on profits in India? I believe it's 22% long-term, 15% short-term, very similar to the United States. My uncle is from Singapore, so he has zero capital gains tax on anything, whether it's a U.S. stock, India stock, Singapore stock, whatever it is. So that's one of the benefits of living in Singapore. But if you live in India, it's still basic 15 and 20 when it comes to taxes. Amit, tell us if people tip the person who delivers stuff in 5 minutes. So I don't know if people do it, but I've been tipping. You guys know I brought $1,000 to India, which is basically 80,000 rupees. I've been giving out money left and right, bro. Like I think I tipped the guy. I think it was 285 rupees. I tipped the guy 500 rupees. The guy who just came, who did a blanket. I gave a guy who gave me a face massage. Dude, I got a face massage on Monday of just like my face at the salon. I got a full body massage 3 days ago. It was $5. $5 for 40 minutes. I gave that guy a $90 tip, which is if the equivalent of rupees, it's like 3,000-4,000 rupees. I was just like, dude, you did a great job. And dude, and the look on his face, he was like, are you sure? I was like, you got it, bro. You got it. So it's one of those things where it's I've just been giving out money left and right. I feel really good about it. These are people that obviously don't have a lot of disposable income. These are people that have to work really hard to make their living. They don't get to just stare at a screen and talk or buy stocks. They're not as developed yet. So I've been giving out money. I've been doing a lot of tips. I don't know if the tipping culture in India is that huge, but you are seeing a lot of people get a lot more demand because there's just so many more people that are willing to spend. And that's the most important thing. If you tip the guy and tell him to go buy yourself some spreads. I did tell my cousin to do that. So in terms of my cousin, we had a brother-sister kind of holiday a month ago, and I Apple paid her $101, and I said buy Robinhood stock, but it was at 19, and she listened, which was good. But one of the things I said on Twitter yesterday, she works in America as a tech worker in California, and she came up to me and she said, hey, can you look at my portfolio, because she's getting into investing. She opens up Robinhood, and I'm like, you use Robinhood? She's like, yeah. And then she's like, yeah, I put $3,000 a month into my brokerage, into Robinhood. And at that moment, I was like, oh my God, dude, this is like not slowing down. This whole wealth transfer narrative, it is not slowing down. And there's just so many people that are allocating capital into this brokerage because it's easy to use. And my cousin, who's just getting into investing, she's learning about it, and Robin is the easiest thing for her to use as well. So, we're starting to see a lot more momentum across a lot of people that are using these brokerage platforms, but in general, a lot of people that are investing. And in speaking of the people that are in India, my uncle said this a couple of days ago that retail investors are piling in $30 million a month into equities, which is a big deal for India because that money could be collecting 7%. Dude, India's fixed deposit income rate, like, how money market funds in America give you 5% or 4.5%. India gives you 7%, 6.5 to 7%. People are still choosing equities over a 7% return on fixed deposits or fixed income because equities are just that much more exciting. And so you're just seeing a lot more momentum in India as people want to consume. What else do we have? When is that video of Airbnb coming out? So Gally, shout out to him. Gally Hyperchange, you guys know him, early Tesla dude. He hit me up and he said he wants to pitch me Airbnb on his channel. So probably first week of November, we're going to set up that collaboration. Gally's an awesome guy. He was early on Tesla. He was one of the first retail investors to ask Elon Musk a question in 2018. So he's been getting really bullish Airbnb. I kind of like Airbnb. Arnie is a good friend of mine. He's bullish on it, so I don't have any position in it, but I've thought about Airbnb. So he's going to pitch it to me. I'll probably try to live stream it on my channel as well, so we can do a multi-stream, and that'll happen first week of November. So we'll get that stream up and going, and we'll see if Airbnb has any momentum. Do you miss eating beef? No, I'm okay. It's been a couple of weeks without eating beef, but the cows in India obviously are very respected, and there's cows everywhere on the street. And I put that YouTube short you guys saw the other day. There's a lot of cows just everywhere. We came across some bulls as well, not just cows, but bulls. And you know how in Spain, like the bulls can run up at you if you do the red flag and shit? There was like a herd of bulls coming towards me and my mom, and they were with some guy who's controlling them. But I was pretty scared because I had to stay put because there was no space for me to move forward. And I was just like, dude, what if they just run at me, but they just walk normally? So we've been seeing a ton of bulls, ton of cows, a ton of dogs that are on the street. You still have that part of India that has not really changed. But yesterday on the highway, there were 8 lanes, and I saw the real modern infrastructure yesterday on the 6-hour bus ride that we had coming back from Jaipur. And we're starting to see just a lot more momentum when it comes to the industrialization of this country. What are the cows used for if they're not eaten? So they're used for milk. People milk the cows, obviously. But outside of that, the cows are treated as royalty because the Hindu religion sees the cows as the holy animal. And so they're allowed to do whatever they want. We were literally on the highway. And again, dude, I don't even want to get into how bad the highway is, but it almost feels like you're going to crash every 2 seconds. And you've got tons of trucks, scooters, rickshaws, cars stopping all at once after going 50 miles an hour because there's a herd of cows walking across the highway. So they're very well respected, and I don't think that's going to change anytime soon. And so the cows will continue to be the cows in India. People choose equity over 7% fixed deposit because inflation is more than 7%, not because equity is more exciting. Well, that's a good point. I think, inflation is 4 to 5%, if I'm not wrong. I could be wrong on this. I don't think it's more than 7%. But yes, if inflation is at least 5% and fixed deposits are 7%, your real return is 2%. And so you kind of have to get a return on your money that's above 2%. And the equity market seems to be the best place to do that. So I think that's another reason India is gaining some more momentum. But yeah, dude, it's been fun. It's been really fun. I have missed not doing the show. How are the toilets there? Okay, so here's another thing in terms of the toilets. I think I've become a bidet person, bro. India doesn't really use toilet paper. Bidets are more common. I've used toilet paper my whole life, but I was forced to use bidets over the past 2 weeks. I like bidets, bro. I think bidets are the way to go. So the toilets there are fine. It's just no one really uses toilet paper. People use bidets. If you don't know what a bidet is, it's just water versus toilet paper. I don't know, dude. I've read some studies on it over the past couple of days because I got really interested on it. Apparently, it's way more healthier and cleaner than using toilet paper. So, you know, everyone was freaking out about the port strike and people not being able to get their toilet paper in America. I wonder if America ever has the transition to bidets, and maybe that will be something that happens. But that seems to be a little bit different. It's official. You've been converted. I know people in Europe use bidets a lot more as well. America really hasn't made the transition. Like if you go to a public McDonald's, you're not going to see a bidet in America. In India, it's like the only thing you have really are bidets. And so it seems like most of the population tends to use that as well. Toilet paper is expensive and it's wasteful as well, right? So that's another reason when you have 1.5 billion people that you can't use it that much. Have you pooped on the street? I have not pooped on the street. I have seen people. I don't know if they were pooping. They were definitely using the bathroom. They probably weren't pooping, but just running through the highway, you could see people. Like, dude, that part of India is still there, and you can't. There's a billion people, and it's not as big as America. I think it's like America is, if I'm not wrong, 3.5 times bigger in terms of land mass than India, with 3x less the population. So you just got a lot of people, and you got to make room for them. So you're going to see stuff like that. But the broader country has started to modernize a lot more. As Rango says right here, Indian sewer system does not support toilet paper as well. That's another big reason that people don't use that much toilet paper. Canada uses it a lot more than America. Yeah, I think America's the last one left that uses a crap ton of toilet paper. I don't know what it is about America, but toilet paper has been the big trend in America for a very long time over bidets. Overall, it's been fun, man. Overall, it has been fun. It's been exciting. It's been cool to be here. I've been enjoying family. Obviously, this was an inconvenient time to go to India with everything going on in the markets and like all the things happening with the Robinhood event, etc. But family. My grandparents are getting older. You don't know how many opportunities you have time to see them. So I think it was a very necessary trip. It was so crazy because 2 weeks ago, or not even 2 weeks ago, a week and a half ago, I didn't even know if I would get into India because of the visa situation. But thankfully, that was resolved. And you can get an e-visa in less than 24 hours, which is pretty amazing. So that happened. Got onto the flight. Flight was cool, 15 hours. I was really bored on the flight. If you guys were following my tweets when I was on the flight, I can't watch a movie. I've just conceded to myself I can't watch a movie. I tried watching The Pursuit of Happiness. Got bored after 10 minutes. I tried watching what's that movie with Matthew McConaughey and the girl? She's Just Not That Into You. That movie. I watched a little bit of on Netflix like 2 years ago. I never finished it. I was like, hey, I should probably finish this movie. Got bored of that. I tried to turn on some action films. I just can't watch movies anymore. So then outside of movies, I went on Twitter. And then the internet kind of was choppy when we got really high in the air, so I couldn't use Twitter. So then I just started walking around the airplane. I just started walking around the airplane. I couldn't do anything. I was just so freaking bored. So I'm not looking forward to the 15-hour flight going back, but it is what it is. We're going to have to do what we need to do to get back into the States. I will leave on Sunday night. We'll be back Monday morning. Most likely Tuesday will be the market open instead of Monday. And we'll get back to our regularly scheduled program. What is really exciting, though, and I think this is for anyone who ever takes a little bit of a vacation or a break, is that when you take a vacation or a break, by the way, let me show you guys the infinity pool. I was at the resort yesterday. That was the coolest thing I saw. Do I have that picture? Yeah, right here. It's like Beverly Hills, California, bro. Look at this. Look at the mountain in the background. This is the resort we were at. So this is where I felt like it was a real vacation. When I was chilling by the pool for like 2 hours, this is where I felt like, oh, I'm on vacation. Because usually when I go to India, you're just like meeting family and you're, constantly running around. Those 2 hours, I felt like I was on vacation. And now that I'm coming back to the States, I think a lot of people will relate with this feeling after they have a vacation. You're ready, you're recharged, you got some R&R, some rest and relaxation, and you're ready to get back in the zone. And what I want to do is get back into the gym. Been slacking on the gym for a month. I really want to get back into the gym, even though I know we're coming up on Thanksgiving and Christmas, which is like peak eating season. I want to challenge myself to like not fall into the trap of gaining 10 pounds in November and December, because like we got to get through with that. And so I want to get back into the gym. Number two, I want to start seriously planning 2025. And that starts with upgrading my studio. I'm thinking of getting a standing desk. I'm thinking of getting a bunch of new desktop monitors. I'm thinking of doing a bunch of different stuff to upgrade the entire studio so that 2025 we start off in the right way. And then finally, I'm thinking of just like getting my health in check and getting better with my diet and just like being healthier overall as a human. Because again, this is one of those jobs where you're sitting all day, you're talking, you're eating a little bit of food right before you go live. Like it's not the healthiest in terms of managing your actual exposure to food and going to the gym. And so that I really want to clear up. Like I don't want to wait till January 1st to do that. I want to start that in November and December, get that really integrated into my routine so that when January 1st starts, it doesn't feel like a New Year's resolution. It feels like just carrying on the routine and keeping it going forward from there. And then 2025 is a big year. 2025 is a big year. I think if we end out the year in a bull run for 2024, then 2025 is going to be important to continue optimizing the portfolio and maintaining momentum. I think 2025 is going to be important in terms of my personal growth as someone who's going to be turning 27 years old, potentially moving out of my parents' house, getting an investment property, things like that. I think it's going to be really important for the personal brand and seeing how big we can really build what we've been building on social media. I think there's just a lot of things going into 2025 that I want to get ready for. And so this India trip was kind of a good 2 weeks to reset and recharge to get ready to come back and do what we need to do. So that's what I'm excited about coming back. Yeah, I want a standing desk, dude. I kind of feel like doing the market open standing up with the camera up here and then just having multiple screens and because I'm already jittery, rocking back and forth pretty much all day. If I could just be standing up and kind of like controlling everything and readjusting the camera and all this. I need to buy a camera that doesn't die every 40 minutes so that I don't have to readjust the camera. There's a lot of stuff I have to do, and I'm probably not even going to get to it until the end of December. I've got to do a lot of planning to kind of see what it looks like so that hopefully in January we can start off with or maybe the last week of December, an official new studio. But I want to do a lot of upgrades, and that's going to be very important as well. Standing desks are great. It makes you a lot more focused. Yeah, that's another thing that I've been seeing is more effective when you have a standing desk. It's just easier to focus on what you're doing because you're standing and you're navigating everything versus sitting down and kind of slouching at everything as well. Why is Palantir down today? I don't know. Again, Palantir, it's been fun covering it for the past couple of weeks with this price action, but I kind of think we chill out in the 40s until earnings, which is crazy to say because we're holding up in the 40s. And a lot of people, including myself, did not think we would get to that $40 range, but we're here. And I think now the healthiest thing to do is consolidate between 35 and 40, if not 38 and 42. I think that's very healthy. I think we've got to be objective that the valuation is getting up there. But I do want to stick it to the bears that are thinking this thing is going to fall back to 20. I think a lot of them are just salty that they missed out on Palantir, which it is what it is. But I think they're getting too quick to call a top. And there's too many people calling a top on Palantir, which makes me feel actually Palantir is not topping out right now, that there is going to be at least some consolidation, if not more sustained momentum, if Q3 earnings does well. So that's kind of how I'm thinking of what Palantir will be looking like over the next few weeks. All right. I think that's it. What happened to Lucid? Lucid did some more dilution, for those that don't know. It was 262 million shares. Lucid's down 15%. Again, I don't know why people trust Lucid, but they trust Lucid for some reason. The Saudis are going to buy up those shares and fill them with $750 million of fresh cash, but they're going to keep burning cash and they're not going to make a profit because Lucid just does not have the operating scale or gross margins to compete with Tesla. So, look, if Tesla is going to have EPS growth of negative 48%, Lucid's not going to have EPS growth of positive 48%. And if they have to dilute again, this is like the 5th time they've diluted in 4 years, then, you're going to see some downside momentum with Lucid. So that's why you're seeing that pressure right now. You got NVIDIA right here, 139, Robinhood, 2.84% down, 26.15 right here, Rocket Lab at 1069, SoFi 971, SoFi down from $10. SoFi is taking a breather. That's okay. It was up like 30% in the past 2 weeks. Probably taking a little bit of a break. Uber at 80, Tesla 219, Baba at 100, NVIDIA 139.18, Robinhood at 26.18, Palantir 41.78. And then the S&P still green on the day at 583.13 right now. Can Lucid go bankrupt? I don't think so because they have too much money coming from the Saudis. I think they have over $1 billion in cash, so I don't think they go bankrupt. But I do think that they're not in the best position to grow. I did get married as well. As you guys can see, this ring on my finger. So for all the people saying Amit's going to get married, he officially did get married. Wife is in the other room right now waiting for me to be done. And then I'm going to go see her for the first time. So that did. I did not get married. That's not happening. Look at not branded saying congrats. I'm not married. This is not even my ring finger. It's supposed to be on the left hand. This is my right hand, even though it's the ring finger on the right hand. So this is a real gold ring that I got here in India. I used to have a gold ring in 2020 that I wore all the time. And then I lost it. It was my dad's ring from like 10 years ago. And he just never wore it. So he said, hey, do you want to wear this? And I started wearing it and I lost it. My dad had another gold ring that is not like, I didn't like the design of it. So we took it to the jeweler here and we exchanged that gold ring and they kind of melted it down and they made this one instead. And so this one I like. It's kind of a simple plated gold ring and I like it. Now, look, I'm not a blingy guy. I don't wear a lot of jewelry. I'm not that type of person, but I do like how a gold ring looks. And because it's basically for free, because my dad had a very old ring that we were able to exchange for this one, just with a different design, I was open to getting this. I usually don't spend on myself, so this is kind of the first thing I've bought. Let me show you guys the gold ring from 2019. In college, I wore this all the time, and it was a really good conversation starter with the females, because they would be like, oh, what's this ring? And then they would take the ring off, they would try it on, and they would be like, so what's the purpose behind it? I was like, I don't know. What do you think the purpose behind it is? It's a nice little icebreaker. And so I think the one in 2019 was a little cooler. It was a little bit more boxy, but this one's not bad. This one's not bad. So yeah, that was one of the things that I got in India, and thankfully, we were able to just exchange the old ring. But I know a lot of people saw this yesterday and they thought I was married. I am not married, but I think it's pretty cool to have this ring on right now. So that's what we got. Gold going up, that's another thing. It's kind of a little bit of an investment, right? I mean, if gold keeps surging, that's another reason we did this, because the only reason we were able to get so much money for the gold ring that we exchanged was because gold prices are going up right now, right? So it's actually the perfect time to like sell some gold and remold it into the type of gold that you actually want to wear. I wasn't even thinking of doing this, but my mom came up to me 2 weeks before going to India and she was like, hey, we have this gold ring. I know you used to wear one. Do you want to exchange it? And I was like, yeah, we can just exchange it, get it for free. Then I'm not opposed to that. So now we've got a gold ring as part of the wardrobe now as well. 24K. I actually don't know, dude. I gotta ask my mom. I don't know about the stats of this. I know it's a real gold. I think it's 24K. Could be wrong on that, but it is real gold, and so that's what we got now. Now every girl will think you are married. They won't come up to you. Amit had an existential ring, dude. It was such a fun ring because like it would be a real conversation starter because people would just be asking, why do you have that ring? And so I thought, you know what, let's get it back again. Okay. I think that's pretty much it. It's also a memory of your trip. Yeah, I was thinking of getting the India map on the ring, but then I was like, it's a little tacky. It would kind of be a little confusing. Maybe you don't see it in pictures, but a solid gold ring where it's just like flat, it should look well with every outfit instead of getting like something right here on the ring itself. So that's why I decided to do that as well. All right, that's it for me. Thank you, everybody. I have deeply, deeply missed you guys. I have tried watching some other people's market opens as you guys have. And, not to toot my own horn at all, but I did realize the difference between my show, which is a little bit more structured, has a lot more data. We're not just constantly watching CNBC. We'll go to clips here and there, but it's not like 24/7 just staring at CNBC and me saying one word here and there. And some other people's streams that, just doesn't have a lot of the juice. So I know that a lot of you guys have been messaging me saying you cannot stand some of the streams that you're watching. I like legit 2 days ago, I tried, like, I don't watch anyone's market open. I sat down for an hour and I just watched it. And I asked myself, as a consumer, would I be willing to spend every single day of my life consuming this type of content? And, the answer to that question, at least for me, was no. And so what I want to do with this show is make it as good as possible, make it as objective as possible, make the data as strong as possible, put the perspectives in as possible, obviously make it as funny as possible, but we don't really have to try for that. That's kind of just natural. and upgrade the studio itself, make the camera better, make the audio better, all that stuff, so that you guys have a consistent place to come to every single day, and you can rely on it, which is the big thing. I just want people to rely on it every single day and come here and get what they need, right? The biggest problem from some of the other market opens is just that there wasn't enough macro analysis, dude. Like, there was like focusing in on one or two stocks for like 2 hours, and I'm like I know we talk about Robinhood and Palantir and Tesla and Nvidia and stuff, but like the first 20 minutes of the show almost every day is what the hell is going on in the economy. Because I think the reason a lot of people in this chat have made money this year is because we paid attention to the data. The data has been positive for the most part. We've balanced it against the crappy data, and we got a bunch of crappy data for the first 6 months of the year, specifically with inflation. And we came to a logical conclusion that equities are worth investing in, which is why people have done well. And so in 2025, if we have horrible data and equities are not worth investing in, I want that to be the theme of the show as well. So there's just a lot of data that you have to look at, which means you have to do a lot of research to bring that data to the audience. And I just want to keep getting better and better at that, and keep getting more contributors. I told you guys I have more contributors that are coming up in 2025, hopefully some female contributors as well, to diversify some of the show. So I think we're going to be able to level this show up, and it's going to be hopefully very, very exciting over the next years, and you guys will enjoy it every single day. And that's pretty much it. That's what we got. Thank you, everybody. Appreciate it. Thank you, everybody, for being here. Appreciate it. It means the absolute world. Moon Money, I love that you speak speed coherently. Appreciate you. Thank you all for joining the stream again back today. We'll be back tomorrow for the market open on Friday. And as Ed says, you don't know how good your wife is until you cheat and meet worse. Yeah, that's pretty much the experience I had, and that some of you guys had over the past couple of days. And for those that didn't cheat and maintained the sanctity of monogamy, I applaud you. I applaud you, because monogamy is hard to live by. It's not easy to be with one person forever, but sometimes that one person is just good enough that you know you can end up being there for a long time. All right, that's it. Thank you, everybody. I'll be back on Friday, and we will keep going from there. And then we got Saturday, Sunday, and then I'll be back on Tuesday next week for the market open, and we will be into earnings season, deep into it. And then we got the election, then we end out the year. And then 2025. Word of the day. Let's do one word of the day, since we haven't done word of the day in a very long time. So let's see what we got here. Word of the day is oh my God, I already know the jokes I'm going to get when I say this. I already know the jokes I'm going to get. Fugacious. So the first joke, I know in the middle, you guys will be saying it is fugacious for a variety of reasons. But the definition, I know you guys will also be trying to leverage at me, because fugacious is a formal word that describes something that lasts only a short time. I'm not even going to wait for the comments in the chat to make the joke that I know is going to come. So I'm going to get ready to end the stream, because I think it's pretty obvious what what fugacious jokes you guys come up with. And I'll leave you guys to make those jokes and do what you have to do. Thank you, everybody, for being here. Appreciate it. Hopefully you guys had a good day, good market open. We'll be back tomorrow on Friday and keep going from there. All right, that's it. Thank you, everybody. See you guys tomorrow in the market open. Bye, everyone. Have a good one.